So what does that mean for Amazon? And perhaps more importantly, its competitors. Joining us now is SunTrust Managing Director Yusuf Squali and Loop Capital Markets Managing Director Anthony Chukumba. Guys, thanks to you both for being with us. Yusuf, what are we thinking about Amazon? We pointed out the stock has underperformed this year, at least versus many of its large cap technology peers as we head into this important holiday season. Are you positive?
Yeah, we're very positive. And in fact, it may have underperformed this year relative to the internet index, at least the way we define it. But over the last 2 years, 5 years, and 10 years, it has dramatically outperformed. And we think that over the next 12 months, it'll outperform again. Remember, they claimed about 35% market share last year of the holidays. We think they're going to claim about 37% this year. So they're growing about, 20%. The market is growing in the mid-teens. So net, we think Amazon is still the biggest winner this holiday season.
Anthony, if Amazon's the biggest winner this holiday season, and we're already seeing signs that it's going to be another record Cyber Monday, why is the stock down 2% right now?
That's a good question. I'm not sure I have a great answer for that. I mean, I agree with Yusuf. I mean, look, over Black Friday, store traffic was down about 6%, but online sales were up 19%. And Amazon has about 50% domestic market share. If we're looking at, blockbuster or record Cyber Monday sales, once again, Amazon will be the largest beneficiary there as well. So I would say, buy into the weakness today.
Yusuf, I guess, we still have almost universal bullishness among sell-side analysts toward Amazon. People have assumed that its competitive advantages are just going to continue to bear out in outperformance. Right. Are we basically just seeing it having to grow into this valuation right here, or is there something you think in particular, whether it's the cost of, instant delivery across the industry that has people, a little more hesitant to pay up for Amazon right now?
Yeah, I would agree with that, and that would actually partially explain or answer the prior question, which is, look, they modeled for about an $800 million spend to allow for this one-day Prime delivery in Q2. They came in close to $1 billion by our estimates. Same thing in Q3. In Q4, they're going to spend $1.5 billion. So from a margin standpoint, if you look at 2019 and 2020, we're assuming a deterioration in margin short term, and we're not assuming that those margins bounce back to 2018 levels until probably 2022 or 2023, which scares a lot of people. That said, look at what happened in 2005 when Prime 2-day free shipping was first launched. It caused a couple of 100 basis point deterioration in gross margins in EBITDA margins, but the net effect was a huge acceleration in the top line from the low 20s, 22% in 05 to like 38% in 07. So that's, I think, what the market is missing here, because if you look at consensus estimates for the top line for 2020 and 2021, the market is assuming a deterioration, a deceleration, and we think the opposite is going to happen. We think we're going to see a revenue growth acceleration with a slight deterioration in margins, which is absolutely fine.
Anthony, shifting gears just slightly from the consumer here where Amazon is concerned, how big is the government opportunity? Certainly the JEDI cloud contract for the DoD, the protest that's happening there is getting a lot of attention, but you've got General Services Administration changing the way it's going to contract, which could create opportunities for Amazon to sell more goods to different government agencies. Is that something that investors are paying enough attention to? How big is that opportunity?
I don't think investors are paying enough attention to that. And I agree with you. It's a humongous opportunity. And there's a few different ways for Amazon to attack that. One is obviously through cloud computing. And let's be clear about this JEDI contract. There's no good reason that Amazon lost that contract. Amazon has first mover advantage in cloud. They have the largest cloud ecosystem. They're most innovative. And so I think you're going to see them get more than their fair share of government contracts going forward. I think to some extent that this, protest was to basically say, hey, Trump, look, we're not going to take this lying down. The other thing is like you said, in terms of services, just in terms of selling products to the government, Amazon Business continues to go at a very fast rate. They're taking a lot of market share from the Staples and the Office Depots of the world. We think that will continue.
Yusuf, we haven't spent much time here talking about AWS. There was a reference to it, obviously, just moments ago, JEDI contract. But, I mean, it is such an important component overall of the company's profits, given the incredible margins and growth of that business. Do you have any concerns at all about the increasing competition from the likes of Azure or even Google's cloud business, that perhaps estimates are a bit high for what AWS can achieve?
Yes, I think that is something that on the third quarter call freaked a lot of people out, frankly, and that explained the dramatic underperformance, at least over the last several weeks. AWS already has the largest market share. They're doing 25 to 30 billion plus in revenues. They have the widest footprint, the best technology. But GCP, or Google Cloud, which we also cover, is literally doubling every year off of a small base, but doubling nonetheless when AWS is growing around, mid-30s type of percent. So on the margin, Azure and GCP are gaining share. My view is this is a very, very large market, a global market in nature. And so you shouldn't just look at the growth rate, you should look at the incremental dollar of revenues that come into AWS relative to the other players. And AWS continues to claim the lion's share of that still.
Finally, we're talking about Amazon, where the holiday shopping season is concerned. But Yusuf, you say there are other names within the tech sphere, names that you cover that could also benefit this season. What are they?
Yeah, absolutely. You got to focus on basically Facebook and Google, who are effectively really the arms dealers for all of the e-commerce players trying to reach the consumer. Peloton is also a very, very interesting play. And Trade Desk, if you're interested in non-walled gardens like Facebook and Google, Trade Desk, TTD is the ticker, is really interesting as the largest player in programmatic advertising in the space.
Yusuf, Anthony, thanks to you both.
Thank you, guys.
Speaking of Amazon, wondering where John is today? He reports live from Amazon's reInvent conference in Las Vegas all day Tuesday, tomorrow, including an exclusive sit-down with a very special guest. Who is it? Find out tomorrow, 11 a.m. Eastern, right here on Squawk Alley.
Most people think of Verizon as a reliable...
I've got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. Next, we donned our skates for Bath on Ice. I'm a natural. Didn't have to hold on to anything. Or anyone. There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
There's a growing threat from Moscow Centre, and Britain's intelligence service think they found the man for the job.
The natural-born agent runner is his own man. He may take his orders from London, but in the field, he is the master of his fate and the fate of his agents.
A powerful portrait of our times, told with unflagging tension by one of the greatest novelists of our age, John le Carré's Agent Running in the Field. Available now at Waterstones.
So do you really think your party's manifesto is plausible, or is it just an election bribe?
Get an in-depth look at all the main party manifestos. From public services to immigration, the Times and the Sunday Times will guide you through. Pick up your copy today or visit thetimes.co.uk.
At Lidl, we're big on getting in the Christmas spirit with our award-winning 8-year-old Queen Margot blended Scotch whisky for just $12.99 and our award-winning range of Hortus Artisan gins and gin liqueurs from only $9.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
The S in Audi S-Line stands for many things, like sporty, stylish, streamlined, and now seductively priced. Like the new Audi A4 S-Line, which you can now have from £359 per month, £2,154 initial rental. Test drive one at your local Audi centre, but you'll have to be swift. The offer ends soon. Search Audi S-Line. Audi, Vorsprung durch Technik. With 48-month contract hire, 10,000 miles per annum, 18s and over, subject to status. Damage charges may apply. No ownership. Ordered by 31st of December 2019 from participating centres. Audi Financial Services. Visit audi.co.uk.
European markets set to close in just a few minutes. Seema Modi has the breakdown of today's action overseas. Seema.
Hey, Mike. Well, Trump's latest tariff threat and a weak U.S. manufacturing read hitting European equities. What's interesting is that we actually started the day higher following better than expected Chinese manufacturing data, but the stock 600 now headed for its worst day since October 2nd. In terms of sectors, tech, autos, and travel and leisure stocks are dragging markets lower right now. Meanwhile, more troubles for the embattled retailer Ted Baker, the UK clothing group, warning that it overstated the value of its inventory by up to £25 million, and it comes after the company issued its third profit warning of 2019 back in October. The stock has now fallen 80% over the past 1 year. But let's take a step back here and look at where we stand going into the last month of the year. Here's where European markets are faring compared to the U.S. What's interesting is that Russia is the lone country outperforming the U.S., even with the relative outperformance of European equities in Germany and France. The UK, as you can see, only up about 9%. We'll see what the next 4 weeks bring us. Guys, back to you.
Last month of the year, last month of the decade. Seema Modi, thank you. Time now for a news update. Sue Herrera has that for us back at HQ. Hey, Sue.
Hello, Morgan. Hello, everyone. Here's what's happening at this hour. President Donald Trump acknowledging trade talks with China may have been impacted by his decision to back protesters in Hong Kong. But he told reporters today that he still believes China wants a deal. World leaders are arriving in Madrid for a 2-week international climate conference. The goal is to step up efforts to stop global warming and to put the finishing touches on the 2015 Paris Accord. House Speaker Nancy Pelosi is among those attendees. And a semi-truck driver is blaming slippery road conditions for a crash on Interstate 94. He lost control of his truck, which was carrying a full load of apples west of Bismarck, North Dakota. Luckily, the driver wasn't injured. And that blast of winter weather is also disrupting air travel. FlightAware now reports there are more than 1,500 delayed flights in and out of the U.S. today, with more than 350 cancellations. Parts of the Northeast bracing for more than 1.5 feet of snow. And it's only early December. That is the news update this hour. Back downtown to you guys. Morgan, back to you.
Winter is here.
It
Sue
is
Herrera,
indeed.
thank you. Still to come. More on Apple's mysterious surprise event in New York City this morning. Is there a chance for one more thing today? We'll tell you next. Stay with us.
This is what we're up to today, and I'm really glad you liked everything. But there is one more thing that I want to talk about.
The CNBC Trend Tracker Live Data Board is brought to you by the CME Group. CME Group, where the world comes to manage risk.
She wanted to move someplace warm.
Tis the season to be hunched over your laptop. Not on our watch. In real life, you can feel your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We hunt in real life. Brent Cross, London. Free parking for all sleighs and cars.
Christmas isn't just about the turkey, you know. At Asda, we've a whole range of delicious joints to bring the family together, like our Butcher's Selection pork loin at just £3.97 per kilo, and our Butcher's Selection beef joint at £4.97 per kilo. So, who's on carving duty? Asda, let's make Christmas extra special. Selected stores subject to availability.
Ah, Christmas, a time for sharing gifts and laughter, and photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
Tonight, TuneIn has your Monday night NFL football with the Minnesota Vikings at the Seattle Seahawks. Kickoff at 8:15 p.m. Eastern.
Thrown down the middle, caught, touchdown over the shoulder, back in the end zone, Snead. Wow!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium.
50, round 40, round 30, round 20, round 10. Back shoulder fade for Harry in the end zone. Caught it! Touchdown!
Upgrade today.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
It is a decidedly down day in the markets, as you can see, with the S&P down 0.84%. Let's get over to Bob Pisani. More on what is moving this morning. Bob.
Hello, David. What's happened is the market's messing with the narrative that we've had for the year. So remember, there's three things that have pushed us to new highs for the year. The first thing that we're seeing here is the Fed's not tightening. Fed's on our side. They're at least neutral. That's not being changed today. Trade war, let's just call it an uneasy truce right now. That's the best way to characterize it. That's not changed much. Here's what's changed a little today. There's been a narrative that the global economy has been bottoming. We've been looking for data points to support that. Generally, we've had that. We just didn't get it from the United States numbers today. So we're talking about the PMI numbers today. Put up those PMI numbers that we saw. So we saw China PMI beat above expectations. Europe's numbers generally have also beaten above expectations. Not amazing, but generally narrative has been supportive of this. Here's the problem. The U.S. missed on its manufacturing. Now you can say, oh, it doesn't matter. It's China manufacturing, a tiny part of the U.S. economy. It's the consumer that matters. But this narrative was things were improving. That's not helping today with the PMI numbers that we got. Mostly this is a tech-led sell-off. And tech is communications as well as technology here. You see, those are the two ones that are down the most. We've had some of the retailers, consumer discretionary down, L brands. That always happens when you get weak economic data. There's your retail data to the downside. So take a look at your five biggest stocks in the S&P 500 right now. These are the five biggest: Apple, Microsoft, Google, Amazon, and Facebook, all down more than 1%. This is almost 20%, not quite, of the S&P, but when you have this down 1.5%, you're going to drag the whole S&P 500 down. Then you throw in a bevy of what I call the high beta names that are in the S&P 500. I'm talking about your Netflix, Visas, Nvidia, Broadcom, particularly the semiconductor names. When you see them down 2%, and these are also big cap names, in addition to being high beta names, it's no surprise that you get this. My sense right now is the important thing is the consumer is still strong. That's the single most important thing that we've got going for it. The market was a little bit overbought going into December. We're working off these overbought conditions. This is probably pretty healthy. I think the most important thing is we do need to see that narrative, that accelerating or bottoming growth narrative strengthen a little bit. And I think that'll probably happen in the next few weeks potentially. Guys, back to you.
All right, Bob. Yeah, got to be proven in the numbers. We'll see. Tech sector, as Bob was just mentioning, among today's biggest laggers, down over 1%. Apple, of course, dragging down the Dow along with it, ahead of the company's invite-only event this afternoon in New York. Joining us now to discuss the stock, today's event, and more, Nomura analyst Jeffrey Qual and Evercore ISI analyst Amit Daryanani. Guys, thanks for being here for it. Just start with this event. Obviously, doesn't seem like it'll be a big financial market mover, but what does it tell us about Apple's business right now, things it wants to emphasize, things investors need to know about it?
Yeah, absolutely. Listen, the event today is supposed to be essentially honoring the apps or outlining the best apps, the best games on the App Store right now. I do think it's relevant, right? If you think about it, they scaled away from an iPad launch that typically happens in October as an event. Instead, they're doing this bigger App Store event today. It kind of tells you the focus is shifting decidedly more and more towards the services and the monetization of the ecosystem. And hence, an event like the one today is getting more prominence versus traditionally these have been more hardware-focused events.
Jeffrey, the market has certainly embraced this idea of giving Apple a higher valuation, in part because the services business is now a larger piece of the whole. Perhaps it's also that iPhone upgrade cycle seems like it's been smoothed out a little bit in terms of buying those phones on time. But I wonder how you think about the way the stock is valued right now, which is basically at its high forward price earnings multiple, basically of the iPhone era at this point.
And that's part of why Apple is not our favorite investment at the moment. I think Apple does merit a higher multiple than it's commanded in the past. Typically, it's traded at a discount to the S&P 500, and now it's that's flat or slightly above. So it does merit better than it has in the past. But I think let's also keep in mind that the company is not growing nearly as much as it has in the past. So we're not willing to chase the multiple quite this high, no.
Amit, the fact that Apple is holding this event when in the past it's usually issued a press release, are there any lines to be drawn to the fact that this is one of the other big tech companies that has been facing some scrutiny, largely due to its app store and how it has worked with developers?
Yeah, I'm not sure this is quite in reaction to those concerns with antitrust issues, but I do think what this is kind of telling you is they want to nurture the App Store community, the developers more and more, and certainly giving them more primetime visibility, having their own version of an award night just for the App Store is probably the right direction for them to go to. And the more of the services growth you see, I would argue you would see a better valuation of Apple as you go forward.
And Jeffrey, do you think that there's appreciable downside risk here with Apple? I mean, you mentioned that obviously it deserves some kind of a decent valuation, but what is its next act that could become some sort of a catalyst for people to get incrementally more excited, or would it be a matter of avoiding disappointment at this point?
Well, I think what's gone on with the stock over the course of the last 3 months is that Apple has proven that the iPhone 11 has been a fairly meaningful cycle, right? I think many of us in the investor community were quite skeptical of the iPhone 11 when it launched. But you know what? It's going to be essentially flat year over year, which on a unit basis, plus or minus. So now that there's not this big hole to worry about for December, a lot of investors are free to start thinking forward until next fall when the 5G phone launches commence. And so there's a lot of hope, I think, associated with what is going to happen at this time next year. We're a little bit more balanced, I think, than many are about the success of the initial 5G phones and the pricing of them. But I think that's generally what has propelled the stock over the course of the last few months.
Amit, I just want to shift gears for a moment before we let you both go. I want to get your thoughts on Huawei. You got the Wall Street Journal report out today that the company is managing to make smartphones without American chips, basically making good on I guess you could call it a threat that they have voiced in recent months. Also reports that there could be more regulations to further restrict suppliers to Huawei as well. Is a lot of this priced into the names that you cover already, or do you think there's more pain to be had here?
I would argue if you look at the broader ecosystem for networking equipment, smartphones that are tied to Huawei, there's probably more pain to be had, because I would say there's an underlying belief that as things resolve, Huawei as a big procurer, buyer of these components will come back to the marketplace. That may not happen anymore. They may be more vertically integrated. So I would say from a broader tech supply chain ecosystem, there's probably more headwinds ahead, especially if Huawei has truly figured out a way to go all, captive manufacturing for all the components that they have.
All right, Amit, Jeffrey, thank you very much. We will see what this event gives us today. Thanks for your time.
Thank you.
Up next, how the Irishman broke the legs of the Thanksgiving box office this weekend. But first, Rick Santelli, what are you watching today?
We had some really weak ISM data, not to mention construction spending. And rates, well, they had popped up globally. What are they going to do now that the U.S. is kind of turned in a different direction? We'll discuss that after the break.
Hi, my name is Sam Davis, and I'm going to tell you about
Christmas, a time for sharing gifts and laughter, and photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
This is someone making an online booking at Ford.co.uk using the words Ford20 so they can service their Ford for £20 less. And this is someone who didn't get their Ford serviced. You see, at Ford, we use Ford genuine parts and Ford-trained technicians. Plus, if you quote Ford20 when you book with us online, you can receive £20 off. Book now at Ford.co.uk or visit your local participating dealer. Ford service. No one knows your Ford better.
Retail customers only. At participating Ford dealers. Cannot be used with other promotions. T's and C's apply. Search Ford service for more information.
Tonight, TuneIn has your Monday night NFL football with the Minnesota Vikings at the Seattle Seahawks. Kickoff at 8:15 p.m. Eastern.
Thrown down the middle, caught, touchdown over the shoulder, back of the end zone, Snead. Wow!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium.
50, round 40, round 30, round 20, round 10. Back shoulder fade for Harry in the end zone. Caught it! Touchdown!
Upgrade today.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
On the goal line, scores! He takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
Hear the action live on TuneIn Premium.
In a move, and a shot, they stop!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium. Upgrade today.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
I'm Scott Wapner. Here's what's coming up halftime before top of the hour today. Today's disappointing data threaten a year-end rally. We are debating where stocks could go in the final month. Plus, 4 well-known stocks cut to a sell today, and we're going to see which calls our committee agrees with, which ones they don't. And despite a pretty strong kickoff to the holiday shopping season, investors placing their bets against a number of retailers. We've got the list of the most profitable and the most painful retail shorts. All at noon on the half, Morgan. We're about 15 away, thereabouts, and we will see you soon.
We will see you then, Scott. Thank you. Let's get over to the CME now and Rick Santelli for the Santelli Exchange. Hey, Rick.
Good morning, and thank you. You know, there's 3 things I pay particularly close attention to lately, and that is, of course, U.S. fundamentals. The next thing would be the level of equity prices, and that correlates strongly with strong buybacks. And, of course, the third issue, hard to handicap, conventional wisdom would dictate that capital expenditures, capital investment, CapEx, is on the weak side, and it's hard to dispute that. Let's take the first one, today's data in particular. You know, global ISMs, whether it was China or some in Europe, looked pretty good, especially China. Coming into our session, we saw a nice pop in interest rates, a very nice rise in rates in the EU, where they are becoming less negative and getting closer to that area that we had about 5.5, 6 weeks ago at minus 22, which is an important benchmark since it's the least negative going all the way back to July. But all that changed briefly, and the dollar index seems to have changed almost permanently, at least with reference to the rally of tight, congested up moves it had last week. And of course, I don't want to leave out construction spending. Not only was it weak at down 0.8 was another number. It was down 0.8 more than we thought last month, because up 0.5% was modified to down 0.3. But the dollar index in particular really fascinates me. This chart starts in early September with the dollar index. And one thing that will be important in a minute, and it's always important, the end of the month, particularly October, was the last Fed ease, of course, and it seemed a market turning point in many markets, not the least of which was the dollar index. Less downside from the Fed. That gave it a lot more potential for upside to reverse the big break it had in October. But you see, 98.37 was a close several times. We really have this double topish formation. The dollar index was really affected today. Now let's get back to our other two topics. We talked about buybacks as a big positive for the stock market. The problem is, if you look at mutual fund and ETF inflows, and thanks Jim Bianco for this, ever since the beginning of November, which of course is that date again, October 30th, the last Fed rate cut, 3 this year, we saw that money was flowing into ETFs, but they were flowing into bond into ETFs. Net movement there, positive trillion since the rate cut, minus 100 billion in the equity inflows, despite what markets are doing. Finally, do remember that buybacks probably are coming from the same well of liquidity to some extent as CapEx. And CapEx has lots of uncertainties with trade. But in the final analysis, even though many are against buybacks, there's tax issues. What are they going to do with the money? They give you dividends, it gets taxed. Buybacks don't. And supply-demand of stocks is a big issue. Obviously, with less supply, more demand. And finally, CapEx. If you look at all the seasonal adjustments that go into all the numbers that create CapEx, there's a lot more debate as to how weak it is, especially in IT. David Faber, back to you.
Okay, Rick, thank you. Meantime, some good news and some bad news for the holiday box office this Thanksgiving weekend. Julia Borsten explains. She's in Los Angeles. Julia.
Good morning to you, David. Well, the good news is for Disney. Disney Plus does not seem to be eating into Disney's box office power. Frozen 2 grossed a record $124 million at the domestic box office over the 5-day weekend for a worldwide total of nearly $740 million. And Lionsgate's Knives Out grossing a better than expected $42 million domestically and $70 million worldwide is proof that audiences will still turn out en masse for a grown-up movie that's not tied to a franchise. Now, along with Queen and Slim and the continued draw of films from prior weeks, such as Ford versus Ferrari, Thanksgiving weekend helped narrow the year-to-date box office decline from 7% before the holiday weekend to down about 5.5% from last year. But the bad news, though, is that while the decline is shrinking, the Thanksgiving weekend box office was still down 16% from last year. Now, that could be partly attributed to Netflix streaming The Irishman starting on Wednesday. Now, hourly streaming volume spiked on Netflix that very day The Irishman hit to about 5 times what research firm Sandvine tracked over the previous few weeks. And movie theaters will see growing competition from streamers putting their movies online faster than typical and than that typical 3-month window. Now, Amazon is already streaming its movie The Report just 2 weeks after it had a limited release in theaters. And The Marriage Story will start streaming on Netflix later this week, just a month after its theatrical release. All those premium theatrical movies being offered at home really raises the bar for what it takes to get a family out to the movie theater. Guys, back over to you.
It sure does, Julia. Still not a bad year-on-year decline, given we got the Skywalker movie coming in December. See how it goes.
We'll see how it does.
Thank you very much. Yeah, when we return, the head of Google Retail at a Squawk Alley exclusive this Cyber Monday. Don't go anywhere. We are back in 2 minutes.
This week at Tesco, buy 2 items from our chilled party food range, like tempura prawns or mozzarella sticks, and get a third one free. So for every 2 people you invite, you can ask another for free. But who? Linda from Accounts or Julio from Magaluf 2010. Tesco, delivering Christmas for 100 years. Cheapest item free, selected stores while stocks last, ends 1st of January.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
We can't make traffic move faster during rush hour, but we can help you catch up on the news with TuneIn. with live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
Welcome back to Squawk Alley. Cyber Monday is in full swing. Global online sales are projected to reach a record $30 billion today, marking a 12% jump year over year. Our next guest is calling this the Super Bowl for retailers. Joining us now for more is Carrie Tharp, Google Cloud's head of retail and former chief digital officer at Neiman Marcus. Carrie, thanks for joining us today. We were just having this discussion earlier in the show that for Alphabet, this is a big time of the year. For Google, this is a big time of the year, the holiday season. Just how big of an opportunity is it, and what does that mean for what you do within the cloud division?
Cyber Monday and Black Friday are a big Super Bowl weekend for all of retail. It's make or break for their year, and they're leveraging all their marketing channels they can to drive that traffic. For us at the cloud, it's a critical point because we host a lot of the largest retail sites in the U.S. and globally. And so our focus is on providing the ultimate in reliability and scalability during this very important period. We have our Google engineers sitting shoulder to shoulder with white glove service for our retailers to ensure that no matter what promotion goes viral or the most important product you have to sell, that we're able to meet the needs and have your customers have a great experience.
Carrie, as someone who has deep roots in retail yourself, what specifically can Google offer to the retailers and the companies it works with that its competitors like Amazon or Microsoft or Oracle or some of the others can't?
Yeah, we really look at ourselves as the retail innovation partner of choice. So whether that's cloud computing capabilities to give you flawless and seamless service to your customers, or the broader Google offerings across our ad suites, our home hub, there's really every element of a customer journey can be touched by a Google product. And how we bring that together for our retailers really allows retailers to drive their own digital transformation and change the customer experience that they're trying to deliver.
Well, can you give us an example, Carrie? I'm just curious. I mean, what would an example of white glove service and then all that other things you just said be that retailers are getting from you that they're not getting from others?
Yeah, so the white glove service specifically is our Google engineers sitting and doing that peak season planning. So as CIOs and C-suite are planning for the season to take on those higher traffic loads, it's us doing the planning, the infrastructure reviews, and sitting with them through the actual weekend in their war rooms, making sure that their systems scale no matter what happens, so that there's never a break the internet moment for one of the retailers hosted on Google Cloud. That's really something special. We also think that the future of retail is driven by retail intelligence. That's taking the hype cycle of AI and machine learning and bringing that value to bear in the retail P&L. So we're helping retailers with Google AI to help drive their ability to do promotions, recommendations, improve their margin with dynamic pricing. So it's really helping that retail C-suite deliver on all of their financial goals, as well as giving them more time to focus on that in-store and omni experience that has become so important today.
Yeah, I know I've certainly been nudged about baskets, shopping baskets online that I haven't actually pulled the trigger on in my emails, reminding me to go back and take another look. So it sounds like that would fall into that category as well, Carrie. I'm wondering, though, this holiday season, with some of the early numbers that are coming in for both Black Friday and Cyber Monday, what are you seeing in terms of traffic patterns and growth versus years past?
We are seeing huge growth across our partner network. So we host some of the large sites, as I mentioned, like Home Depot, Kohl's. Shopify is a big player that's an e-commerce platform that provides e-commerce for over 1 million different merchants. They were serving up 15,000 transactions a minute and having over 40% growth in their revenue. Other partners like TrueFit, which is a solution that provides on-site recommendations and fit information for customers. They serve hundreds of retailers globally. They had an 86% growth in their traffic over this weekend. So we see a very strong shift to digital as expected. What we hear from our retail partners is during this weekend, they expect over 50% of their sales to be digital. That's well over double what they normally experience in every day from an online to store perspective. So we see things very consistent with that digital growth. Adobe Analytics reporting 20% growth over the weekend, while Retail Next reported store traffic being down 2%. We definitely saw that come through for our partners.
Carrie Tharp, thanks for joining us today.
Thank you.
Let's give you one more check here on the major averages. We are off the lows on the S&P, but still a decidedly down day given the data, perhaps some concerns over the latest trade in terms of Brazil and Argentina. Squawk Alley returns in less than 3 minutes.
Johnson & Johnson is a baby company.
'Tis the season to be hunched over your laptop. Not on our watch. In real life, you can feel your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We can't in real life. Brent Cross, London. Free parking for all sleighs and cars.
This week at Tesco, buy 2 items from our chilled party food range, like tempura prawns or mozzarella sticks, and get a third one free. So for every 2 people you invite, you can ask another for free. But who? Linda from Accounts or Julio from Magaluf 2010? Tesco, delivering Christmas for
Up Black Friday with save up to half price on brands like Number 7, Jack Wills, Soap and Glory, and Harry Potter. Find these and more dazzling deals in store and online today. Boots, let's feel good. Offer ends 2nd of December. Selected products available in selected stores and boots.com. Exclusions apply.
Tonight, TuneIn has your Monday night NFL football with the Minnesota Vikings at the Seattle Seahawks. Kickoff at 8:15 p.m. Eastern.
Thrown down the middle, caught, touchdown over the shoulder, back of the end zone, Snead.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium.
50, round 40, round 30, round 20, round 10. Back shoulder fade for Harry in the end zone. Caught it! Touchdown!
Upgrade today.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
Welcome back. More Tesla Cybertruck parodies to get to. We could call this peak Cybertruck, perhaps. This one, Thanksgiving, the med. Themed, excuse me. Twitter user Dan Milano sharing a video of his brother Greg's handiwork, a replica of the Tesla Cybertruck made completely out of mashed potatoes. The windows, of course, were mashed as well. I don't know that I could do this with mashed potatoes. I feel like it would just smush all over the plate.
That seems chilled. I think that might be after they were
or a lot of butter
for a while.
Yeah. Meantime, taking a look at the markets right now, the Dow's down 200 points. The S&P is down 0.7%. It's the biggest move for the S&P. Also, the Nasdaq, which is down 1% since October. With that, we're done here at Squawk Alley. We're going to send it over to the judge in the half.
All right, Morgan, thanks. I'm Scott Wapner. Front and center this hour, the final stretch after a great year for stocks is your money primed for a December surge. It is 12 noon. Then this is the halftime report.
December, usually the best month of the year for stocks. But is that in jeopardy? Your next money move is straight ahead. The holiday shopping season getting off to a strong start. But the bears are circling a number of retail names. Today, kicking off a critical month for Boeing and its plan to get the 737 MAX back in the air. How to play this stock from here? Roku tumbling on a downgrade. Wells Fargo, Deere, and Biogen also getting cut. We'll debate them in our calls of the day. The investment committee is ready to go. Halftime report starts right now.
It is good to have you with us on this Monday. Our investment committee at the table today, Joe Terranova, Jim Lebenthal, Steve Weiss, Jenny Harrington is the CEO and portfolio manager at Gilman Hill Asset Management. Rob Sechin is back, UBS Private Wealth Management, one of Forbes' top 100 financial advisors. Speaking with the market, stocks are still on pace for the best year since 2013, coming off their best month since June. Tech, small caps, almost posting their best month since the summer. So we enter December with a lot of momentum, derailed for the moment, Joe, however, by a ISM manufacturing report that throws into question that the industrial economy is bottoming, and a headline from Wilbur Ross that says tariffs are going to be increased if there's no deal by December 15th. Thank you very little.
Yeah, well, we came in position very strong and aggressive for further appreciation, but you have to pay attention on a day like today, to your point, when you get the ISM manufacturing that reverses a lot of the optimism that we were bottoming. You did not see that in the report today. I think more importantly was the president's tweet this morning. The president, for the very first time, when he spoke about reinstituting tariffs on Brazil and Argentina, he used the word therefore, and he tied it to the devaluation of their currency. It's the very first time that the president has done that, where he has enacted tariffs or reinstituted tariffs based on currency depreciation. So that was troubling to me. That is troubling to me. We have a Federal Reserve meeting next week on the 10th and the 11th. I think the president knows that he's limited in his ability to get the Federal Reserve to cut rates further. I don't think anyone see that's going to happen. But I think now we're going to begin to talk about currencies and countries that are depreciating their currencies. And I think that's taking a little bit of the optimism, a little bit of the exposure to growth names and high beta names. And it's saying, OK, let's take a step back today. And I think that's what's going on.
So you have traditionally, Rob, the best month of the year, December. OK, it's up 73% of the time and on average about 3%. Yet you got this tariff issue hanging out there. Is that the biggest risk, not only between now and the end of the year, because you have a actual date where you're going to get an increase in tariffs if you don't have a deal. But going forward,
I think it's one of the biggest risks. I describe our positioning as cautiously optimistic. The caution comes from the fact that the market's discounting a lot of good news. Valuations are not excessive, but they're certainly extended. There's complacency that's creeped into the market. And let's not forget, there's impeachment process, the election cycle, and we don't have a deal on trade, which is the most important short-term issue. And I think the optimism comes from the fact that we don't think we're going to slip into a recession. The profits are coming in better than expected. And next year, we think profits can accelerate.
But part of the bet, though, right? Hasn't the bet over the last, let's say several weeks been on the fact that the industrial economy is bottoming?
Yes.
And they start to look up, and then you get a number like today, which is a drop from the prior read and a miss on expectations for today in and of itself.
There's been a lot of volatility around that number specifically. But if you look at some of the other numbers, you could have looked last week: GDP, durable goods, personal consumption, retail sales, consumer hanging in there. So I think you have some mixed news as it relates to the economic data, but there's no question in my mind that the data has been coming in better than feared, and that's why we're near all-time highs, and that's why we've de-risked a little bit at this point, because we suspect that some of this news, the macro news, is going to have a little bit of an ebb in the short run, but longer term, we're going to start to flow again.
Jenny, I said we come into December with a lot of momentum. We had the best month since June.
Right.
We've eclipsed these records and set new ones, and yet we got this tariff issue hanging out there, and it seems like that's going to be the overriding factor now for at least the next couple of weeks. Are we going to get more tariffs, or aren't we?
Maybe in terms of superficial noise, it's the overriding factor, but I don't think, for me, it's not integral to my investment process whatsoever, and it's not what I look out to. I think what we're looking at right now, and I don't think it's a bet on the economy bottoming. I'm not worried about the manufacturing numbers that came out today. I'm not worrying about tariffs. What I'm thinking about is what are earnings going to look like next year. And I'm thinking about the consumer. And I'm thinking about the strength of the consumer. I'm thinking about global growth accelerating. I'm thinking about interest rates being as low as they are. I'm thinking about energy prices being stable. So trade just isn't in what I'm looking at when I'm investing.
Weiss, you had a lot of good things to look at coming into this month. If you look at what the NASDAQ's done and tech, and pretty much a broad swath of investments have worked. I mean, there's an article today on CNBC.com. Almost every investment worked in 2019, whether it's stocks or bonds or gold or this or that, corporate bonds, double-digit returns across the board. Right. So you can have turbulence out there and still have your investments work.
Yeah, so look, I shaved a little bit of some positions last week. Roku was a trading position. I got lucky. I'd sold it. I sold some Illumina. I pared back on some United Rental. And the reason I did that is because everything was up, and my own personal barometer, I was starting to feel really, really smart. And I don't like feeling really, really smart, because that means that others are feeling even smarter and things are working.
It's an unusual feeling for Weiss.
Well, it's an unusual feeling.
We don't like it either.
Right. It was unusual, and I'll explain what that feeling is to Rob, since he'll never have it. But that meant that it was getting too easy. There was too much momentum money in the market. So we take Roku's downgrade today by Morgan Stanley, down significantly. Why? Because it got a lot of momentum money, of which I was part of for a small period of time. Not because his view has changed. The analyst has never liked the stock. He went to underweight because he had a 110 price target on it. So it's 160. You can't stay equal weight. So I thought it was prudent to take some exposure off. I still have a lot of exposure. I still do anticipate the market moving up to year end. My other concern is trade.
Can the market move? Let me ask you this thing. Can the market move up if you anticipate it doing that? Can it do it if you get the tariffs on the 15th?
No, I agree. No.
I don't see how it possibly can.
It's down 10% in a heartbeat, and then you take it from there. But when you get to those tariffs, and when you go to the size of those tariffs, that's meaningful. We've already seen the impact in corporate America, and we haven't seen a lot of it because of political reasons. Most CEOs are afraid to talk about it.
I know that people say, "Oh, there's no way the president's going to let the stock market decline into the end of the year. He's not going to put these tariffs on." The president may think he's got some currency to play around with because it's a great year for the stock market.
That's what the pattern has been, Scott. You just nailed it. As every time the market goes up, he feels like he's got room to do whatever he wants with regards to trade. What it looks like, frankly, is he's bitten off two much more than he can chew with regards to trade. This was supposed to be trade wars are easy to win, and here we are a year and a half plus down the line, and we don't even have phase one signed. Plus, by the way, we talked about, I think, Joe, you brought up, Jenny, you mentioned that U.S. economic figures today were not good, including construction spending. Well, Chinese economic figures are starting to look better, a lot better. And so that takes away some of the vulnerability that Chinese I had. Well, okay, but apples to apples that you can only believe these figures so much to begin with, they're still showing improvement. The problem for all of us, and Jenny, I'm going to disagree with you. As much as we see things the same way a lot, I just don't see how how you get those earnings up 10% next year if you don't get at least phase one signed before these tariffs go into effect. I just see that as such a chilling effect on the corporate economy. Nobody's going to want to hire. Nobody's going to want to buy new IT or build factories. It just goes down the tubes. And I think in a somewhat more permanent sense than, the president can reverse it by saying he's, sending out a tweet that he's going to meet with President Xi whenever. I mean, it's just the market is it's like Charlie Brown with the football. Doesn't believe it anymore.
And I look through this in a different way because when I'm listening to company earnings calls, right, we just ended earnings season, we had 36 companies report, and when I go to the different conferences, like the MLP conference and the financial conference and the retail conference, trade's not in the dialogue the way it should be if earnings were going to come down a lot because of it. I think companies have said, here's our status quo with trade, here's what we're going to do, we're going to move on, we're going to work for what we have today. And I just don't think that I think companies are moving through it. I think consumers are moving
Earnings
through it.
are literally flat, S&P 500 this year over last.
Next year we're expected to be up to 10%.
But there's no basis for them being.
That's 10%. The problem.
Why not?
What is your basis?
The basis is global growth accelerating, right?
But what's your basis for that?
All right, that's sort of what we're debating off the top of the show as to whether the ability to have that happen actually exists.
I think you can grow without having a huge tariff deal. If we just muddle along and keep getting closer.
I think stocks can go 19 times the multiple. I have to point this out, and I'm sorry.
Wait, say it again.
We're about $165 per share S&P 500 this year. S&P 500 is 3120. That's about 19 times earnings. That is not a multiple that can sustain anything less than 10 times.
I would argue that Oppenheimer is looking ahead for next year, Rob. They got 3,500 on the S&P.
That is certainly
for 2020.
That is, even though we're cautiously optimistic, that is certainly possible. And let me tell you the construct that's possible under. You don't need the earnings. You need the earnings to accelerate a little bit. You need investor positioning to change more. And there's a tremendous amount of cash on the sidelines. And what causes investor positioning to change more are two things. Number one, there is no alternative. And what is the right multiple? I'm telling you, it's not 19 times when 70% of the economies have negative interest
There's already been no alternative. That's why I read you the list of all those trades that have worked this year.
Can I ask you?
But if you don't get a deal,
if you don't get a deal,
in trade, you have a whole different scenario.
I think we're getting way ahead in the calendar. I think you have to look at the environment of what has happened today relative to where we left off before the holidays. Something has certainly changed. And for stocks to continue to appreciate through the remainder of the year.
That.
Well,
what's changed?
The steel tariffs.
What has changed? Scott, a tweet about tariffs doesn't mean everything's changed. I mean, let's see. By the time the president lands
that's tariffs heading in the wrong direction.
Yeah, but
you could have a whole.
We've totally desensitized to his rhetoric. By the way,
I disagree with that.
Come on,
I disagree with that because on a day where you're you've never before tied tariffs to currency devaluation ever. And now we're introducing that.
I don't think that's true, Joe. I don't think that's true.
He's come out. There is not. I don't want you guys to talk all over each other. All right. I mean, we can make your points and counterpoints, but the president from day one has been talking about currency devaluation and the Chinese, and as part of the reason for the Fed and this. He's talked about it all the time.
He has talked about it.
He has talked about the current environment all the time.
He has never instituted a tariff on a nation specifically because of currency devaluation. That's a fact. He has not done that. Today he did that. That's what feels different to me from where we left off last week when I was sitting here on this desk telling you need to go all in on equities. So all I'm saying is you got a warning shot today that potentially in the next 10 days you could be faced with something that's representing a different position towards your attitude to all in on equities.
Scott, I think he's right, and I want to buttress his point for a second. What we're seeing here, the market is saying, wait, the president has not learned that tariffs are a blunt force instrument that should not be wielded as frequently as he's yielding them.
The market's not saying anything. The S&P is down 20 points.
Right.
Going in a record high market.
Going into what we all agree should be, both by the trend in the markets and seasonally, a great month. It's a bad start to the month.
You're getting too worked up over one day. The first day of the month. I agree. 64 bips means nothing. In terms of your point, it's a valid point. However, you're assuming that I think you're assuming something that's occurring in President Trump's thinking that takes it a leap too far. I'm not willing to make that same concession. But let me finish my point. He's come out repeatedly and said that China is a currency manipulator. If what you're saying is true, that he's getting ready to drop the hammer and say we're not doing a tariff deal because China's a currency manipulator, then number one, that's not new information. Maybe new information as he phrases it. Then it's look out below in the market because he's throwing a new negotiating point in there that didn't exist before. That means we're not getting a deal anytime soon. You don't want to be anywhere near the market. One more point, and I'll let you go. In terms of earnings next year, I hear people come on the show, next year is going to be a good year, re-accelerated earnings growth. Nobody's ever given a reason for that other than because.
Why are you disagreeing with me? I'm
not disagreeing with you. I'm talking to Jenny.
I gave you
you've got a persecution complex.
No, because you said that I was wrong about reading too much into what's going on in the markets. Then you said the exact same thing that I said. How do you get? I'll put it to you, since you want. How do you get top line growth without phase one?
But I did not say that. What I said is you could get multiple expansion, and you know
from
this.
19,
you can get. What is the right multiple in this growth and inflation paradigm is 20 historically.
What growth?
You can look it up. Slow growth, no inflation.
But Sichi, how do you get top line growth? You can't get margin expansion here. You're not going to get profit growth.
About the fundamentals, and let's start talking about investor positioning in the fact of what is the right multiple in this growth and inflation paradigm when interest rates are negative.
Right.
It's higher than it is today.
You're right about interest rates.
And I'm not a bull. I'm cautiously optimistic. I've told you why I'm cautious, and I think you're right to be cautious. And it wouldn't be prudent to take on undue risk right now because a lot of good news is priced in. But as you look through the removal of some of these hurdles, and I don't want to overreact to the political headline. I want to overreact to the political outcome if it happens. And I think what's happening right now is we are all trading on political headlines. And how can you trade on that?
This question, though, and I don't know the answer to it. How many successive years have there been in the market where multiple expansion has driven it? This year was hold on, let me just finish. This year was entirely multiple expansion.
But that was coming off of an abnormally low base.
What's that?
That was coming off of an abnormally low base also. We had last year like 14 times
we
down 20%.
That's actually not a normally low base. That's statistically, historically, the average market multiple of 14.5 times.
No, average market multiple is 16.5 times. We ended last year at 14.5
Context matters, though, guys, to both of your points. In some growth and inflation paradigms, it should be 14, and in others, it should be a lot higher.
You said, I heard you say this. I don't think I heard you wrong. You said, quote, we don't need the earnings going into next year to get the market to move higher.
We need modest earnings growth is what we expect. We don't need 10% earnings growth. We're expecting mid-single digits. If we get that,
be fine.
That'd be a fine out. That'd be a fine outcome.
There's a reason why Mike Wilson at Morgan Stanley, continues to be cautious, if not negative. We expect disappointing EPS and are overweight defensive staples and underweight discretionary, a typical late cycle underperformer. So, he's been the loudest, let's say, voice on.
And he's got a more sophisticated view that the market doesn't adopt anymore because it's the rising ship. Rising tide lifts all ships. So normally I think you'd be right, but you can't tell me that tech is not going to go up. Maybe it's not going to go up in January.
Maybe it will, but
not in
his
February.
point is partly, relevant to the conversation now on earnings.
And I'm not disagreeing with him. I'm not looking for blow.
Jenny's looking for 10% earnings.
Well, by the way, you can get 10%.
Not thinking that.
You can get 10%, and this is what really sort of baffles me. Phase one is so easy. There's nothing to it. It's a skinny deal, whatever you want to call it. It's an empty deal. We're going to sell them some soybeans, and maybe we'll lift some restrictions on Huawei. Why don't we just get past that and get to the 10% earnings growth, try to get real GDP back above 2.5%. It baffles me that we're spending this much time on a nothing burger, which, by the way, has an asymmetric risk. If you don't get the nothing burger cooked, we go down 10%.
Joe just told you you had like a Whopper, not a nothing burger.
I look at
what happened today's a Whopper.
No, you look at it in terms of risk and position. You use those words, risk and position. Okay, Positionally, I came in to December max long. Zero cash on the
Do you represent
side.
the populace?
I think much of the equity investing community, has now reestablished their positioning towards that.
They're playing catch up, but they're not there yet.
What's their position, Rob?
Average is 20% cash right now. That's humongous.
That is, Rob, that's statistically incorrect. That is statistically incorrect. The average right now is not 20% cash. If you look at all the wirehouse balances,
I'm speaking for a recent study that we just did. So you specific to our firm, I'll get that, but I think our firm's pretty representative. It's a wirehouse firm, pretty large. I will tell you that investors are still off sides broadly as it relates to this, and professional money managers are playing catch up right now, and that's why we've seen this latest run. And I think you have to be mindful of the fact that that could continue as long as you don't get this gigantic piece of negative news, which you're right to say, and I'm going to give you credit, you're right to say you have to acknowledge because there's asymmetric downside.
So let's say the only way that Oppenheimer turns out right are those highly optimistic predictions on the S&P for 2020 is to have favorable outcomes, to get a lot of that money that's on the sidelines to push into the market. We've said there's a ton of money sitting on the sidelines.
I don't think it all comes in. I just don't think it comes in.
If it doesn't come in, you're not getting 400 S&Ps.
Right. I mean, households have made it pretty clear that what we used to think was full investment by households is no longer going to be the case. As far as institutions go, I don't know what the documents of the funds you're referencing are permitted to hold in terms of cash, but most have 10% cash.
It's allocation.
And in terms of catching up, historically, 75% of mutual funds underperform the S&P, so they're always playing catch-up theoretically. So I don't think you can rely on somebody deciding all of a sudden to put cash in as your investment.
My whole point about the way we started this show is that we've come into the last month of the year with a lot of momentum.
Right.
Yes. It's traditionally a great month, best month for stocks. You're up on average 3%. Okay, that's where we began the program. Does anybody feel like, other than Joe, who thinks it is, who's thinking today is somehow changed the calculus on where stocks can go over the next 4 weeks?
Yeah.
Joe does, because he made the point.
We've decreased. I was counter-punching
so we're doing
Joe a little bit. We're doing the same thing. I was counter-punching Joe, but we've de-risked. There's no question about it. Because we think, to Jim's point, there's asymmetry in the up versus downside, but we do not think we're going to head into a recession next year, and that's the important point.
Let me answer it this way. I think every day that goes by that we don't get visibility to a deal with China, that the risk ratchets up.
I agree with that.
Let me just say it this way, okay? Coming into today, the positioning for me as an individual was max long. Something about today, the manufacturing miss, the president's focus on currency, acknowledging that there's not much he can do with the Federal Reserve. You just have to be alert and aware. Scott, all I did was sell my semi exposure.
Right.
That's all I did today. I sold Lam Research, which I have held for the better part of this year. I sold Teradyne. There's a high correlation there between the potential risk elevation related to a misstep in China and the U.S. trade to the semis. I'm out of the semis. I don't hold that exposure. Looking forward to 2020, to me, it's not about cash coming back on the sidelines. It's about tech continuing to perform. If tech at 25% of the S&P is going to have another strong year, we're going to be okay in 2020. And I'm positioned that I believe that's going to happen.
So let's do this. We still want to get to these retail shorts that I teased coming into the program, the most profitable and the most painful. We'll do that before we go today. But it's also a critical month for Boeing, and we don't want to miss that. Our Phil LeBeau joins us to explain exactly why. Phil?
Scott, remember, for a long time, Boeing has targeted recertification of the 737 MAX in December. So they've only got 29 days, and a lot of things have to happen. This week, they begin human factors testing. We're not going to go too deep into the weeds explaining exactly what that is, but essentially, they're bringing line pilots into the 737 MAX simulator, running them through a number of scenarios, seeing how they react when these scenarios happen, when the alarms go off, etc. There is a certification flight that is expected probably somewhere in the mid-December, the 16th, 17th, 18th, somewhere around there, though that's very fluid and it could move. And then they've got a certification flight final report that's likely by the end of the year. And don't forget, FAA Administrator Stephen Dixon, he says that he will be flying the fixed 737 MAX after that certification flight. That's unlikely to happen this year. Look for that more likely in the second week, maybe the first or second week of January. So as you take a look at shares of Boeing, keep in mind that the FAA has said they are going to be setting training rules as well for the pilots. Those still need to be set. And there's a 15-day comment period that's part of that whole process. Add this all up, and it's pretty clear that you are looking at a certification that is unlikely to happen this month, more likely to happen sometime in January. And you might be saying, well, why haven't we seen a bigger drop-off in shares of Boeing? It's because we haven't seen them change their production ramp for next year, Scott. So that's really what Wall Street is focused on right now. If there's some change to that production expectation for next year, that's when you might see even more pressure on shares of Boeing.
All right, Phil, good stuff. Into our conversation of those who actually own it today. Phil LeBeau in Chicago, Jim Joe Weiss. Jim, first crack at Boeing.
Well, look, I'm long the position, and there's some assumptions that I have. Number one, the problem with the 737 MAX is fixable. Number two, it is fixed. So now we're just in a waiting game as far as the FAA goes. And I wouldn't put it past President Trump to put a tweet out there saying, hey, fellas, let's move it along. This is our biggest exporter in the nation. But underneath that, there are some problems that we need to pay attention to. I'm not selling my position on this, but we need to pay attention as well with what's going on with the 777X program. They did a fuselage test about a month ago, and the darn thing ruptured during the fuselage test. Albeit it was within 1% of the maximum load, but the 777X is a major moneymaker for the next few years. So you got to pay attention to that as well. Again, I'm not selling right now, but I'm paying attention to it.
Okay, Weiss, you own it.
Yeah, so look, so I think right now the market's assuming that it's not going to get certified in December, despite what the CEO said, which I think was sort of poorly phrased. He should have said we're reasonably optimistic rather than essentially guaranteeing it. Despite that, I come back to the reason I own it. There are two manufacturers. Airbus has not been able to meet their capacity in terms of deliveries. So whether it happens in December, January, February, I don't care.
Joe, give me 30 seconds on it.
Plain and simple. You mentioned it before, momentum. Here's a classic example. That's why I bought the name. Momentum. Cleared above the 200-day moving average. The technicals look good. Here we are. Maybe I'm a little bit too long.
All right, good stuff. We'll take a quick break. A lot more coming up. In fact, here's what else is coming up on the Halftime Report.
Bearish calls on four big stocks: Deere, Wells Fargo, Biogen, and Roku. We'll get the trades on the desk straight ahead. Plus, the investment committee is ready to answer your questions. To reach us, go to cnbc.com/halftime or tweet us. The Halftime Report with Scott Wapner and the Traders is back in 2 minutes.
I don't like the idea of my broker taking the
I've got to tell you about our beautiful city break in Bath. Midweek is the perfect time to beat the crowds. Just an hour and a half by train from London. It was so relaxing. We headed straight for Bath Christmas Market. Oh, I can still smell the roasted chestnuts and mulled wine from the chalets. Next, we donned our skates for Bath on ice. I'm a natural. Didn't have to hold on to anything or anyone. There's so much to do in Bath. I'm already planning my next trip.
Discover the magic of Bath this Christmas. Plan ahead at visitbath.co.uk/Christmas.
Something explosive is coming to the home of rugby. When Harlequins meet Leicester Tigers, expect fireworks. With tickets from £17 children and £27 adults, Big Game 12 is more than a Gallagher Premiership rugby fixture. It's London's biggest rugby party. Enjoy music, entertainment and a truly incredible atmosphere before the big game kicks off at 4:30pm, Saturday 28th of December at Twickenham Stadium. Go to tickets.quins.co.uk or search Big Game 12.
For the independent bookseller who found you that first edition. For the baker who brings the smell of freshly baked bread to your door.
And for the barista who never needs to ask your name.
We've all got a part to play
Every little tap keeps your high street alive. And helps your communities thrive.
So if you love where you live, shop small.
Shopping on your local high street can make a big difference. Shop small. Only by American Express.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Witch Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Oh, it's you again, the home energy sales guy.
Yes, but this time with a great broadband deal.
Ah, well, we just switched to Shell Energy broadband, and they've given us 2 months on the house.
Oh, with a deal like that, I think I'll switch too.
With Shell Energy Broadband, get superfast fibre for just £23.99 a month for 18 months. Plus, we'll give you 2 months on us. Search Shell Energy Broadband. Offer ends 8th of December. New customers only, subject to status and availability. Installation fees may apply. For full eligibility criteria and T's and C's, visit shellenergy.co.uk/broadband.
Welcome back, everyone. I'm Sue Herrera. Here's your CNBC News update at this hour. London's Mayor Sadiq Khan paying tribute today to 2 people killed by a 28-year-old convicted terrorist. 2 college students, Asika Jones and Jack Merritt, were stabbed on Friday on London Bridge. British Prime Minister Boris Johnson was among the mourners attending that vigil. France's Mediterranean coast is dealing with its second week in a row of deadly flooding. More storms are moving into the region as well today. Authorities report 6 people have been killed by those floods. Here at home, travelers at O'Hare Airport in Chicago trying to navigate flight delays and cancellations. FlightAware reports almost 500 flights have been canceled in and out of the U.S. today, mainly due to those winter storms. And take a look at this. It may look like a hat trick, to you anyway, but from afar, there you go. It's actually thousands of teddy bears on the ice at an arena in Pennsylvania. The minor league hockey team, the Hershey Bears, holding their annual Bear Toss holiday toy drive. A record number, 45,650 stuffed animals were counted, and that is more than 10,000 more than last year. All going to a good home. You're up to date. That's the news update this hour. Scotty, back to you.
All right, Sue, we like that. Thank you, Sue Herrera, with the news for us. All right, Wall Street analysts making big calls on 4 stocks today. Deere, Wells Fargo, Biogen, and Roku, all downgraded to sell. We've made all of them our call of the day. Just to kick all these around, let's go Deere first. You say, Jim, not surprising. Price target cut to 150 from 175, and that's at Bank of America.
Yeah, I mean, it was a horrible pre-announcement that they gave last week, Scott. I mean, it was really horrible, and it's all on the ag market, right? So there's concerns that maybe there's going to be overplanting next year. Crop prices go down, not enough profits for farmers to buy more tractors. Obviously, the trade war, agriculture is right in the crosshairs here, and that's why they lowered their numbers. It's just a tough place to step in and say, I really want to buy Deere here. I'm not doing it. They do point out Cat, by the way, as a potential name that they would put money into.
If we got phase 1, would you buy Deere?
No, but I would buy more Cat.
That's how you play it?
Yeah.
Okay. Let's kick around Wells, because Jenny, you own Wells Fargo, was downgraded to underperform today at Ray J.
Right. So we've owned this for a really long time. We've owned it since 2013. It's lagged the whole time. We're not selling it right now, but it's definitely a source of cash because you need to look at a stock like this. And even though it's trading at 13 times earnings and has a 3.8% dividend yield, it's kind of taken up room in the portfolio. So when we find something that's really compelling that we think has more upside, this will probably be the source of cash to fund that.
Joe, you own it as well?
I do. And in January, it's going to be a show me moment for new CEO Charlie Scharf. He's got to put forth a profit improvement plan. If he does that, I'll stay committed to the stock. If he doesn't, I might pare back my holding a little bit.
You could kitchen sink the whole thing, too, just given, what they've done in the past and how optimistic people are about his role, right?
I'd buy it.
He's going to get kind of a pass on that.
Yeah. If they kitchen sink it, which I believe every incoming CEO thinks about and probably should do, I'd buy it. You love to
that's
buy
my
a fake
point.
interest
Trying to
ticket.
play the contrarian side of it in anticipation of it.
We just think even the best of Charlie Scharf might take too long to play out for us to stay in the stock.
Okay. Next one, Biogen, downgraded to underperform. That's at Baird. 250 price target. That's 14% downside. You don't own it. You've added to some other names in that space.
Right. In that space, we owned Celgene, which merged with Bristol Myers. We were left with a reduced size position in Bristol Myers last week and increased it. And I'm pretty excited about this holding. It's trading at about 9 times earnings. They have up to $2.5 billion of synergies. They have a fantastic cancer drug pipeline. So we were excited to be able to increase our Bristol Myers position last week.
Okay. And then last but not least, Jimmy, obviously this Roku downgrade over at Morgan Stanley. Underperformed. Price target goes to 110 from 100. So they bumped the price target. Yeah. Why underweight? They say we're bullish on Roku's growth prospects. However, shares are up 400% year to date. Exuberance. There's just a lot of exuberance in the name.
All right. So there's two ways to discuss this, technically and fundamentally. And technicals win out. I'm sticking with the position. Let's get the headline out there. And frankly, the reason is because you don't know if a day like today is a reversal of momentum or a buy the dip. You look at the past year and a half, and days like today have been buy the dip moments. So until there's proof, i.e. 2 or 3 days in a row of this going down, I'm not saying the momentum is broken, and I'm sticking with it.
And you're not adding to your position either.
No, I have enough of it.
Okay, but let me
just keep going.
You have enough, or you've had enough?
I get you on that. For people who may have followed you in,
yeah,
what should they do today?
Okay, I'm staying with it, so you should stay with it. I think maybe the question that I'd want to answer
is, should they buy the dip? Someone says
they don't have it.
Should I buy I own the stock.
Yeah,
it's down 15%. Should I buy more?
Yeah, I own 3%. That's where I am. Full transparency. If you're below that, I think this is a buy the dip moment. Am I being clear?
Yeah, now you are.
What's I thought I said buy the dip, but
he just said 3%.
More like 5%. So you know this is something I'm playing with lightly. Fundamentally, okay, the analyst is right. It's up 400%. It trades at 15 times sales. You know, if you compare this to some of the other recent IPOs that have gone way down, there's just no way these guys are ever going to have to raise capital. Now, hopefully that's not my Waterloo moment, but these guys are growing revenues at 50%. And there's no place else in the world that I can see 50% growth. I'm not in this for the fundamentals. And if the momentum is clearly turned, I'll get out. But to argue against this on a fundamental basis, there's just nobody growing like this.
I see. To me, this is.
You sold yours. Why?
I did sell mine, and I just started shaving exposure. 2 weeks ago, I would have bought it today unquestionably. To think that an analyst who had a hold on it and has missed the stock since he initiated coverage on it, although good analyst, can drive a stock down 15%. I mean, that's a buying opportunity. However, I think there's symptomatic something bigger, which is that people are actually more worried than they're letting on to be worried, because they're willing to sell the stock down 15% and there's no lift to it. I may buy this in the next day or two because I think this is just abnormal for this to happen. But I think you got to look into that, to what it might mean more for the market.
And systemically, there's been this rotation from high-flying growth to quality growth.
Yeah, right.
And it's
growth
been
at any price is,
it's quality growth at a reasonable price.
Happened to that. All right, good stuff. All right, up next, what the moves in ETFs are telling us about the last trading month of the year. First, let's get a check on the S&P sectors, though. Take you to the wall for a look at what's leading and lagging. It's just energy in the green today. Everything else in the red. S&P's down 26. Halftime's back after this.
The first time I walked into a...
This winter, there's no place like Wicked, the award-winning West End musical. Discover the incredible untold story of the Witches of Oz and how one came to be called good and the other wicked. Wicked at London's Apollo Victoria Theatre. Extra shows added for Christmas.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Witch Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
On 3, our unlimited data is actually unlimited, like 4 reels. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
The S in Audi S-Line stands for many things like sporty, stylish, streamlined, and now seductively priced. Like the new Audi A4 S-Line, which you can now have from £359 per month, £2,154 initial rental. Test drive one at your local Audi centre, but you'll have to be swift. The offer ends soon. Search Audi S-Line. Audi, Vorsprung durch Technik. With 48-month contract hire, 10,000 miles per annum, 18s and over, subject to status. Damage charges may apply. No ownership. Ordered by 31st of December 2019 from participating centres. Audi Financial Services. Visit audi.co.uk.
Ah, Christmas. A time for sharing gifts and laughter. And photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
Since 1990, the S&P 500 has gained 20% or more from January through the end of November on 6 other occasions. According to our data partners at Kensho, a year after those moves, the S&P trades higher 100% of the time, with an average return of 18%. For more, go to cnbc.com/Kensho.
And welcome back to the Halftime Report. I'm Bob Pisani here at the New York Stock Exchange. Time for ETF Edge. Let's talk about the December setup for ETFs. December, the #1 month for stock gains, going back 50 years. And on the surface, this looks like a very promising setup. 60% of NYSE stocks are above their 200-day moving averages, way above normal. And the small cap Russell 2000, ticker IWM, also recently broke out to a 52-week high. Joining us now, Andrew McCorman, Managing Director of ETFs Trading Solutions at Wallach Beth Capital, ETF consultant Chris Hempstead, formerly Deutsche Bank's head of ETF sales. And Andrew, it's hard to argue this setup is fantastic. Yeah, I think best month of the year, and tech leadership, bank leadership, healthcare, 3 biggest sectors in the S&P 500 are the leaders.
Yeah, the setup's good. You have a whole nother year of absorption of political, not overreacting to tweets and things like that. I think in September and October, you had a lot of people saying, thinking about last December. Clearly, that hasn't happened. As you said, the setup's better in those sectors, and I think you will see some tax loss harvesting. Yeah, I think you'll see a little bit of that.
Chris, this is not December 2018. We keep pointing out the Fed is not raising rates. We have generally, let's call it a truce, an uneasy truce on trade. And again, the global bottoming in the economy, a little hard to figure out, but very different scenario than last year, December.
Much different. I mean, stick to what's really happening. Watch the flows. There has been flow into value, but performance has been in favor of growth. 2020 is going to be an election year. Gold will come back into favor. It will be volatile. We have been desensitized to tweets. So I think equities are in play, and definitely the positioning is equities are going to be, in focus for 2020.
Value has outperformed growth. We have IVE versus IVW. That's in the short term. The big S&P 500, growth and value. But I have to say, when you have these stocks as value, come on, Apple is a value stock. We keep pointing this out. Against all common sense.
That's it.
United Health and Bank of America and JP Morgan. When these 4 stocks, some of the biggest stocks in the S&P are up like this, it's no surprise that value outperforms
And I
growth.
just think it's money going to quality. It's people, again, just don't, they have gains already. Why take any risk going to the end of the year?
It's value over growth over 3 months, but the 3-year, the 1 year, and the 1 month all favor growth.
Profit taking, though, we've seen it in REITs so far this quarter. We've seen it in consumer staples, the defensive groups. Is that going to continue into December?
Just portfolio reallocation. Yeah. I don't think it's an exit from REITs. I just think it's adjustments going into 2020, and some likely gains taking out of REITs.
You'll see some big trades in the sectors, and that'll just be them switching from iShares to the select sector or whatever it is to make that trade happen.
Gold's lost a little bit of its luster. We're not doing anything at all this quarter, only up 14% for the year. GLD has actually seen some outflows. Some of that, of course, is the costs associated with them. What's going to happen with gold?
I think gold is back in play, like Chris said, once the year starts. There's just no reason to not, position yourself for equities. I don't think anyone's going to take a risk with the last 3 weeks of the year, but I could see gold be really in the first quarter coming back.
With the election on the table, you can't take gold off.
Okay. Andrew and Chris, thanks very much for joining me. More ETF Edge. Don't go away. Our live online show starts at 1 p.m. Eastern Time on etfedge.cnbc.com. We'll talk with the head of ETFs at the New York Stock Exchange and more. Scott, back to you.
All right, Bobby. Good stuff. Thank you. Well, some options bulls making moves in a big bank and a retailer today. Pete Najarian joins us next with his trades in unusual activity. We're back in just 30 seconds.
ETF Edge is sponsored by Invesco.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
All right, as promised, we're back on the halftime report. Industrial names are taking a hit today on the back of what was that worse than expected manufacturing data. L3, Harris, Jacobs Engineering, Boeing, Honeywell. They're among the biggest losers. You don't own Honeywell, Joe, do you?
I do not.
Not anymore. Out. All right. Consumers continue to spend, but some investors are still betting against retailers. The short interest in the XRT retail ETF is hitting its highest level in nearly 8 months, according to the financial firm S&P Partners. This comes as that ETF is having its best year since 2014. Bank of America hitting its highest level in more than a decade today. And bullish options traders see more upside ahead. Pete Najarian joins us from Minneapolis with that. Hey, Pete.
Hey, how are you doing, Scott? I'll tell you what, you talked about that. Yeah, decade highs for Bank of America. Nice move to the upside that we're seeing here. And disclosure, I own the stock. I plan on holding this stock. And by the way, the options that we're seeing today got me into the calls as well. So I'm double dipping, so to speak. But it's really a 2-week option. December 13th is when these expire. And what we're looking at right now is the 34 strike, the 34.5 strike, and the 35 strike, all very active in December 13th expiring options. Now, the 34.5s, that's the biggest that we're seeing. That's about 17,000 last I looked. It might be bigger now, but that has been something that started off the day at about 5,000. It's been just picking up, and the momentum moving to the upside there has been extraordinary. Those options are very inexpensive, by the way. They're 15, 18 cents, somewhere in that range. So risk reward, you've kind of got to like what you see there. And if this stock does continue this breakout, those options ought to move very rapidly. I got a second one for you too as well, Scott. Macy's. Now, this is a trade. I bring this up every time. This is a trade. This is not a company that I love. I don't think that they're really in a great position right now, but somebody is buying this week's calls, the 15.5 strike calls in Macy's, as the stock's trading right near that 15.5. It's actually pulled back below there, so the stock was a little bit higher when they were buying these calls. They're buying these. They expire Friday, so December 6th. These are the 15.5 calls that they're buying in nice size. About 7,000 of those originally hit, and that was trading around 30 cents. So again, risk reward. Now, what I always look at when I see something like this is, are they saying to me that Macy's is going to move to the upside on news? I don't think so. I think what they're going to move to the upside, if they do, is a short squeeze, about 30+% short interest right now in Macy's. So I'm going to play that short squeeze as well. I'm long these calls, expecting to see them maybe potentially. Stock gets up through 16, 17. These calls are going to absolutely quadruple. It's going to be a great hit.
Yeah, if the thing moves up, of course. That's the bet.
That's the big if. Yeah.
All right, Pete. Thank you for that. Appreciate it.
Great to see you, man. Yep.
Nice vest.
It's cold here, man. It's like 15 degrees here today.
Okay. Hey, you going to the Monday night game? Is that home or away?
That's away. That's in Seattle. But look for the Vikings. They're going to be really, really ready for this one. They're pumped up to stop Russell Wilson. I can tell you that right now.
Yeah, whatever. All right, Pete. We'll see you back here. All right, that's Pete Najarian. All right. So Pete was talking about Macy's. Right, placing a bet the stock's gonna pop. So the Wall Street Journal had an interesting look today on retail, right? And I said earlier the most profitable and painful in terms of shorts. Macy's right at the top of the list in terms of one of the most profitable retail shorts. Not a big shock, right? No one's shocked by that. Kohl's, Nordstrom, Big Lots, Ollie's, Bargain Outlet. The 5 biggest losers among retail shorts are the most painful for those shorting: Target, Dollar General, Dillard's, Dollar Tree, JCPenney.
I'm surprised Best Buy is not.
JCPenney.
Yeah, but the thing that has me scratching my head here is this is a trade that's gone on for 3 years at least right now. I mean, you look at some of these Macy's, JCPenney, Nordstrom, 3 years of just almost straight down and losing 2/3, 80% in some cases. This article, Scott, when you're on the street long enough, there's something that smells like a setup for short covering. And Pete was talking about this with Macy's calls. I don't know how much more juice the shorts think they're going to get out of this. I mean, yes, some of these are going to go to zero, but not all of them, and some of them are pretty darn close to zero. This feels like a setup for short
I don't know what's new in the short story, right? And maybe nothing has to be new because it's been going on for a while. It's just the continuing atrophy, and particularly what doubled down on it to me was the weather this weekend. So that stopped a lot of people from going out to the stores. More went online.
You have fewer shopping days between Thanksgiving and Christmas this year.
So,
I don't know what the numbers
so look,
are
I think it's
today,
good.
Cyber Monday.
They have to put up real good numbers or decent numbers above expectations, whatever they are, and the stocks will move up nicely. That's an opportunity to reshort them.
I mean, for someone like Macy's, which Pete is placing his bet on to have a pop, whether it's short covering or whatever else, you're not going to need much in terms of a number out of the holiday shopping season to get anything out of that, right? Anything close to break or a positive is going to be a winner.
I think it's
bankruptcy.
Yeah, I think it's tough to trade the whole sector. Personally, I think it's a story of haves and have-nots within the sector. Those that have been able to make the digital transition are going to do well.
That's why we said it. What is it? It's Costco, it's Best Buy, it's Target, it's Walmart, and I mean, you throw Amazon in there just because
Lululemon. So on Macy's, on Macy's, they've got an analyst day coming up in the beginning of February, and it could be a turning point, and it could be kind of inspirational. It could be the thing that does kick off the short squeeze.
You used the word bankruptcy. There's a second level trade here, and that's the debt side. And a lot of the exposure could be, all these names, they're all high yielders. So you could be gaining long exposure on the debt side and utilizing the equity as somewhat of a hedging mechanism through a short.
It's an expensive short, though, when you've got the yield that you do on Macy's. It's a lot to carry.
They all have big yields.
Coming up next, we're trading some of Wall Street's biggest battleground stocks. We're going to go around the desk on Facebook, GE, Slack, Uber, and more. Do it after this.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Ah, Christmas, a time for sharing gifts and laughter, and photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10 gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
Hey, tune in listeners. Steve Kornacki here from NBC News. I want to tell you about a podcast I'm hosting called Article 2, Inside Impeachment. It's dedicated to bringing you the latest developments on the impeachment inquiry into President Trump. Every Monday, Wednesday, and Friday, I talk to NBC News reporters who are closest to the story to break down what's new, what matters, and what it means for the 2020 election. Search and favorite Article 2, Inside Impeachment on TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown. touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and tune in on Facebook, Twitter, and Instagram to get the most out of Tune In.
Here on the show.
I know. You guys want to have your own conversation, or can we actually commence the show? What do you think?
Let's begin.
Who's going to talk?
Okay. Welcome back to the halftime report. Check out these names: Tesla, Dish, GE, AMD, Facebook, and Uber. They're among 20 stocks with the most divided opinions on Wall Street. That according to CNBC analysis of FactSet data. Names have the widest gap from the average analyst price target at the top and the bottom. You guys were so
chatty,
eager to chat. What do we think, Rob? What stands out to you, man?
Well, you know I can't talk about specific stocks.
That's why I went to you anyway.
But
sometimes you get the ball thrown at you.
Yeah, that is fine, and I'm happy to catch the ball. There is a rotation underway that I think persists to quality, as we discussed at the beginning of the show. I don't think that is changing. Quality dividends, quality growth in dividends, and less focus on some of these high-flying, high-revenue growing names, in my opinion.
Okay, Weiss?
So I don't own enough Facebook because it's been going up. I still think it's there despite possible regulatory pressures. In terms of the others, I've looked at Western Digital for a while, but Tesla is just too tough. Pure momentum, Uber and Lyft. I don't see the value proposition there at all. And GE's just plain too tough.
GE's going to be a great battleground name for 2020.
Yeah.
It is. It is. Because that's when things have to happen. If they don't happen then Culp's going to be, hey, I tried, but I couldn't do it.
Think they're going to?
He won't say that.
You think they're going to happen?
I don't think so. And if they do, by the way, the stock's overvalued. What do they have to do? What are the earnings that can justify the current valuation? It's an Under Armour story, which I don't think is going to happen either.
Jimmy?
So I look at these, and I think the ones that are the most in peril are the ones that potentially need to raise capital. You look at Uber, you look at Lyft, GE as well may have to raise capital, and Tesla. These stocks have been all over the place, and in my opinion, it's been if investors think that there's going to be shares or debt issued to fund ongoing operations, they're in no mood for that, and haven't been since the summer, and won't be into next year. So those are the ones I'd stay away from. There are some there, though, that I think actually have great momentum, like an AMD. I don't think there's really any question about whether AMD is doing fabulously. It is doing fabulously. Maybe it's a little bit overpriced, but I think the momentum there continues.
Well, I think what jumps out on that list that they put up on the screen is that AMD and Facebook, and we own Facebook, have low valuations, tremendous cash flow. They're really viable companies, whereas the rest, like you said, they do need to fundraise.
But fundraising is one thing. If fundraising will cure your issues, then it's okay. Then stocks go up.
That's
it's not going to cure the issue with Uber or Lyft or possibly even GE.
There's a big difference. If you want to jump in on something and you know the earnings are coming to you, those are the safe ones on the list.
Okay. Well, by the way, you can see the full list of Wall Street's most divisive stocks on CNBC.com. Coming up, we're answering your questions, and we do have your final trade straight ahead.
Can you customize the S&P 500 to meet your clients' growth objectives?
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Ah, Christmas, a time for sharing gifts and laughter, and photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds, or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown.
Search NFL today. Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
From ESPN and the award-winning producers of The Sterling Affairs comes the latest season of 30 for 30 podcasts. 4 brand new stories of espionage.
He wanted this team to be the Barcelona of women's basketball.
Resilience.
I started to scream. I tried to get away.
Corruption.
It's the culture of win at all costs.
And rebirth.
How will we ever rebuild it?
30 for 30 Podcasts, Season 6. Listen in favorite 30 for 30 podcasts on TuneIn.
We're answering your questions now. First up, Joe, you're up first. Okay. David in Colorado wants to know about JP Morgan. Is there still room to run?
Yes, I believe there is. This is a company that continues to show revenue growth, double digits, which is rare for a financial institution. Company that I'm long, 76% U.S. revenue exposure. I like that. Citi, as comparison, is only 20%.
Okay. Jimmy, Jody in Connecticut, Electronic Arts. Is it a buy going into the holiday season?
Yes, Jody, it is. However, let's be careful, okay? It trades at a 20 times multiple. Historically, it should be a 24 times multiple. I'd really wait for that confirmation of it getting above 105. It's had trouble getting past that level. That's where you're really confirmed it's going back to a 24 multiple.
All right, Rob. Steve in Ohio wants to know about the Emerging Markets Index, EM. Where's it going?
At 10 times, it's underperformed dramatically year to date. A lot of people expect catch up in that to develop. I think you need a comprehensive deal, not an incremental deal to break EM out of his funk. Plus China, which is the third best performer year to date in EM, is starting to fade a little bit. And I'd be worried about that.
Okay, Jenny from Ethan in New Jersey. Honeywell or Caterpillar? Which do you prefer and why?
So this is not an apples to apples comparison. CAT's big chunky earth moving equipment. Honeywell is industrial, electronics, avionics. In our case, we own CAT. We think it's cheap. It's 14 times. It's got really well positioned going into the next year with lower interest rates.
Okay. Lastly, Weiss to you from Lewin, New Jersey. And be quick if you could. United Rentals. Is it going to keep moving up?
I think it will. I shaved some of it because it's had a big run, but I think it's got some more legs on it.
Okay. Thanks for the questions and thank you for the answers. 30 seconds. Final trades. Joe Charanova. Wendy's. Jimmy.
Roku looks like it's already turned.
Okay. Jenny.
Piling onto the Barron's mentioned, Tanger Outlets.
Rob Sechin.
IHF, Healthcare Providers ETF, up 19%, more room to runs. That's since August.
Okay.
More room to run.
I bought some Roku during the break. Final trade is
You
Bob
did?
though.
You bought some Roku?
Support.
You're unbelievable. All right. That does it for us. The exchange begins now.
Scott, thank you very much, and welcome everybody to the Exchange. I'm Tyler Matheson, and here is what's ahead for a Monday. Trade is back in the spotlight in a big way. The president has now put tariffs on 2 new countries today alone, and the Commerce Secretary Ross says that tariffs will go up if there's no China deal. We'll break it all down. Plus, from commodities to stocks to bonds, almost every investment is working in 2019 so far. Can that momentum continue for the rest of the year and into 2020? And the deals are hot in December, but retail stocks may not be. We'll tell you that story ahead. But we begin with today's markets. And Dom Chu has the red numbers. Hi, Dom.
All right, so Tyler, a lot of the parts of the market that have been working as of late are not working today. Maybe not unexpected, given the fact the entire market is selling off. At the highs of the day, we were actually positive, Tyler, up 58 points for the Dow Jones Industrial Average. At the lows, we were down 254. So as you can see right here, we're hovering just around near the lows of the session right now. The S&P 500 off 26 points and the NASDAQ off by about 1.2% as well. If you take a look at one of the parts of the market that did react very negatively, you mentioned that ISM manufacturing services number or manufacturing number. Those numbers came in worse than expected. As a result, you can see here right around 10 a.m., a large gap lower here in some shares, including railroad operators like CSX engine manufacturers like Cummins and also PACCAR, which makes trucks and other machinery. Those stocks among the hardest hit. And of course, it's Cyber Monday, just came off Black Friday. Payment services companies like Visa, MasterCard, Square, and PayPal have been a hot part of the market as of late. But today, they are now off. Visa off 1.75%, MasterCard off 2%, Square off 3%, and PayPal off 2%. A little bit of that sheen coming off as we head into this Cyber Monday holiday. Of course, Tyler, it's expected to be a record spend this time around. We'll see if that sell on the news situation with these payment services stocks continues. I'll send things back over to you.
All right, Dom, thank you very much. President Trump playing the game of tariffs before heading to the UK for the NATO summit. In a series of tweets, the president saying he's restoring tariffs on steel and aluminum from Brazil and Argentina. He also defended tariffs on China, saying U.S. markets are up as much as 21% since he implemented them a year or so ago. But this morning, China demanded a rollback of tariffs before signing any trade deal. And finally, Trump called out House Speaker Nancy Pelosi for not voting or bringing to the House a vote on the USMCA, saying it is sitting on her desk collecting dust. For more on trade with Fred, we're joined by Fred Kemp. He's CEO of the Atlantic Council. Michelle Caruso-Cabrera, both are CNBC contributors. And behind all of this trade talk, Michelle, the president is in Europe for the NATO meetings. How are they expected to go? What's on the agenda? And you divide it by the agenda that we all know about and the agenda that takes place behind the scenes.
Yeah, there's the official agenda about increasing troop readiness, et cetera. But the behind-the-scenes agenda is really that there's a big fight going on between the president of France and the rest of NATO because he says that NATO is suffering brain death. He blames President Trump for that. And he claims, Macron claims that he wants to have a European army, which is pretty laughable because they can't even manage to spend enough just to cover their NATO basics, never mind having their own army.
Why does he say the president is stifling NATO?
He is upset with President Trump for the withdrawal from Syria without consulting the rest of NATO, and Macron felt like they should have been included in that. They had troops on the ground in Syria. So that's something that's really bothered him. Plus, there's a historic relationship between France and Syria.
Fred, before we move on to trade, which is really sort of right in our wheelhouse in a way that NATO is not, the president has long pressed NATO, as Michelle intimated just a moment ago, to spend more, the other NATO members, to spend more of their GDP, 2% of GDP, on defense. Very few, I can't count them, but very few of those countries have gotten to that level. But the directional movement is positive, isn't it?
It is positive. So since 2016, you've had $130 billion more spent by allies on defense in NATO. 9 of the 29 are now at the 2% of GDP target for defense spending. President Trump could take a victory lap this week if he wants to, and the tone's relatively positive right now. He's saying you're having impeachment hearings. Democrats are having impeachment hearings in Washington while I'm representing our country to a strengthened NATO. But he could also change the tone. All roads do lead to Beijing. We'll cover that when we get to trade.
Right.
But on this issue, he's going to come to allies and say, look, I need more help with you on 5G. You can't let China build out your telecommunication system. You're going to be giving up all your secrets to them. But on the other hand, he doesn't have a great alternative to offer them. So China tends to divide the alliance, while the Soviet Union in the old days tended to unite the alliance.
But I think coming back to that point, the president made a point about NATO countries not fulfilling their obligation. And it seems like his point has in part at least been heard. Let's shift to trade. Let's shift to these new tariffs on Argentina and Brazil on steel that's coming from there. And there is a China connection here, isn't there?
For sure. At first glance, tariffs on Brazil might be surprising because the new president of Brazil was so solicitous to President Trump. He was called the Trumpers Brazil.
Cut from the same cloth, in a way.
Exactly. Many similarities. So why is this happening now? Well, on the campaign trail, the president of Brazil was very critical of China, but then Xi Jinping was in Brazil just last week. They've signed a bunch of deals, and he's become much more solicitous to China, in part because his farmers sell so much to China. One, because China's now just has long imposed now tariffs on our soybeans, exactly. Plus, their currency's gotten weaker, so they're able to grab market share from American farmers in a very big way, and he doesn't want to hurt their farmers.
Yeah, your reaction to that, Fred, do you agree with what Michelle said, that even in the question of Brazil and Argentina, China looms large?
Michelle's absolutely right. What's awfully interesting as well is this is the first time that President Trump has linked currency policy to tariffs. So he's saying that Argentina and Brazil, and by the way, the two largest economies in Latin America are the ones he's targeting, have been manipulating their currency, have been depreciating their currency, and therefore they're setting their prices lower, and that's harming American farmers. On top of that, Brazil, in the first 10 months of this year, sold $25 billion worth of farm products to China, filling in a lot of gaps that U.S. farmers lost. And that's 10 times what Brazil sells to the United States in terms of steel.
Fred, hasn't he fundamentally made the same currency point with respect to China? In other words, that they have artificially depressed their currency so that their exports are cheaper?
Well, he may have done so. I was thinking, though, in terms of actually an announcement of a reimposition of tariffs. I've never heard him use a currency argument for that before. But I think Michelle is right, as well as it's also linked to the visit of the Chinese to Brazil, and also an announcement last week that Argentina is going to be, for the first time, selling more soy meal to China as well. What we're in danger of, however, is he may be responding to these two countries growing closer to China, but by imposing these tariffs, he could drive them even closer.
Even closer still.
That's right.
Final thought, Michelle?
Argentina has a new president-elect coming in. They will be no friends of the Trump, this new administration, so he probably doesn't care anymore. Their currency got pummeled, not because of anything they did, well, except for their
mismanagement of their finances.
Exactly.
Yeah.
But it wasn't their choice. They didn't want their currency to weaken as dramatically as it did. Brazil, you could argue, may have weakened their currency.
Final quick thought, and we got to move. USMCA, I mean, he's not wrong. The person's not wrong. This bill has been sitting there for a long time.
And Nancy Pelosi and the Democrats have had concerns about the enforcement mechanism in the USMCA. If they have complaints about what's happening, how do you get them fixed? They claim they're close on those issues. We'll see.
We're going to call you the USMCC from now on. Michelle Cabrera, thank you very much. Fred Kemp, always great to see you. Thank you very much. All right, the clock is ticking for Boeing as the company looks to certify or recertify the troubled 737 MAX before the end of the year. Phil LeBeau live in Chicago with how realistic a goal that may be. Hi, Phil.
Most people believe it's not terribly realistic, Tyler, increasingly day by day, because they've got so many things that they need to accomplish. This week is a big one for Boeing. Out in Renton, they've got a couple of things going on. First of all, there is human factors testing. That's where line pilots are brought into 737 MAX simulators, run through a number of scenarios. They look at how those pilots react in those scenarios. There's also briefings that are beginning this week as Boeing is trying to get aviation industry influencers an inside look at what's happening. This is all part of them with a charm offensive, trying to get ready for when the MAX comes back to have people say, look, it's fixed, it's ready, it works, it'll be fine. But look, separate from this, the rest of the month, look what they still need to do. Look at some of these hurdles. Certification flight, that's likely sometime mid-December. Then you've got pilot training rules, which may not happen until the end of the month, if not early in January. And then there's a 15-day comment period after those rules are first published. Guys, you're looking at something where you're not seeing a certification until sometime in January, maybe mid-January, late January, somewhere around there. And you might be saying, well, why isn't the stock moving back more? Because they're not going to hit the target Boeing put out there. It's all about the MAX production scheduled for next year. The company is going to be ramping up starting in the spring, then going through the end of the year. If that changes, Tyler, that is when you would see this stock come under really significant pressure, because until that happens, most analysts are saying December or January doesn't really matter to us. What really matters is that production schedule.
And what about other countries beyond the United States and their recertification process? They've often sort of followed suit like ducks on a stream behind the U.S. This time, that doesn't sound likely.
Well, you'll likely have the Canadians and then EASA come quickly after the FAA. Maybe not within a couple of days, but it won't take long. The big question mark is how much longer it will take the Chinese to sign off on the changes with the MAX. Now, the Chinese airlines, Tyler, they need this in service. They need this plane back in service. At the same time, we talk about all the geopolitical stuff going on. Don't think that that isn't part of the equation with the Chinese as well, that they might be sitting there saying, oh, really? It's your biggest exporter? It'd be a shame if they couldn't get this thing signed off on right away. So don't be surprised if the Chinese take a little bit longer.
Sounds like you may be saying that Boeing to the Chinese may be what Huawei is to the U.S. in a funny way. A chip, at least.
Yeah, well, certainly I think you can't underestimate that possibility.
All right, Phil LeBeau, thanks very much. And here's what else is ahead on the exchange.
Coming up, the orders are in and the packages are flowing. But can the shippers keep up with demand as more and more shoppers hit the web and not the mall? Plus, consumers may be cozying up to retailers, but it turns out in the month of December, investors don't. We have the numbers. And a big month, a big year, and big blockbusters. Disney has been on a tear. Can they continue the magic in 2020? This is The Exchange on CNBC.
This is the investing book everyone is talking about. It's called...
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Witch Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
Ah, Christmas. A time for sharing gifts and laughter. And photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in-store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
Your old car, your loyal friend, so many memories. It's impossible to leave their side.
Until now, get £5,000 off a selected brand new Citroën when you trade in your old car.
Alors, out with the old, in with the new. Hello Citroën, hello comfort.
The Citroën Swappage. Trade in your old car for a brand new Citroën, including the award-winning SUV range.
Citroën.
Discount on OTR price of selected Citroens excluding C1. Registered by the 31st of December when trading in a qualifying vehicle. Not in conjunction with other offers. Search Citroën Swappage for full T's and C's.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
Well, Cyber Monday sales are estimated to grow Cyber Monday today by 19% to nearly $10 billion this year. And that would make it the country's biggest day ever for online sales. Despite the holiday cheer, though, December tends to be the worst month of the year for retail stocks. For more, I'm joined by Michael Baker, retail analyst with Nomura Instinet. Michael, welcome. Good to have you with us. Why is it, do you think, that retail stocks on average have performed badly in the month of December over the past decade?
I think it's because of the risk. There's just so much risk to full year numbers that come in this short amount of time that any sniff of something going wrong or some disruption causes a little bit of a panic among investors and typically leads to outsized moves and on average to the downside.
I'm looking at the stocks you cover. They go from Target, Walmart, Best Buy, Dick's, Ulta, TJX, Ross, Burlington, so forth. They have all had a fantastic year. They're all doing pretty well for retailers, right? Surprised?
That's true. Of the 16 names that I cover, the average appreciation year to date is about 33%. So it's been a really strong year for some of the bigger retailers. Now, some Target at the high end of that, some others have been down year to date, but on average, it's been a pretty strong year for those names that I cover.
When you look at Black Friday winners and losers, it looks like, I guess these were largely online sales. Nordstrom up 60%, Walmart up 53% year over year, Amazon up a lot. But losers were Target and JCPenney. What conclusions, if any, do you draw from those numbers?
Well, we try not to draw too much in terms of a conclusion from Black Friday. Over the past 5-10 years, Black Friday, we think, has become a little bit less significant than it had been in the past. When I started out in this business, it was all about Black Friday. Now that's been spread out. Deals start earlier in the month, even into October. More deals today, Cyber Monday, and throughout December, and even after Christmas. So we try not to draw too much in the way of conclusions on Black Friday itself. I can tell you, I was in the stores, though, over the weekend, and we saw big crowds and a great selection of toys at Target. Some of the off-price retailers, TJX in particular, we thought looked great as well.
Yeah, they just seem to be an engine that is running very, very well. So if I had to ask you for your 3 faves in the 16 stocks that you cover, what would they be right now?
The 3 names that we like, and this is not a December call, this is a 12-month call. We do like the discounters, and we do like the off-price retailers. If we had to pick one off-price retailer, as much as we love TJX in terms of a stock, we think Burlington has a little bit more upside here. We also like Lowe's as a turnaround story, closing the gap with Home Depot. Again, that's over the next 12 months. On the discount side, Walmart, Target, BJ's have been names that we're recommending. If we had to pick one in that space, it would probably be Walmart at this point.
As I look at these stocks, some of them have really high gains this year, like Target up 88%, Best Buy up 49%, Dick's up 47%. If I own those companies today, or if I'm thinking of buying, would this be either a good time to take some profits or a good time to wait to buy?
Well, yeah, so again, we think December is not a great time to own retail stocks in general. Just looking at the historical data, retail does tend to underperform on average in the month of December, and even if you start on Black Friday through the end of the year. That underperformance is actually more pronounced, interestingly, the more a company makes in terms of their annual profit in December or post-Thanksgiving. For instance, Best Buy tends to be one of the more volatile stocks and on average an underperformer this time of the year. You could say the same for Dick's Sporting Goods, which obviously had a great day when they reported last week. But historically, it does tend to underperform other retailers in December. On the other hand, the less a company makes over the holidays, they tend to hold up better. Of all things, Home Depot and Lowe's tend to be really strong performers in the month of December, outperforming the market 8 or 9 of the past 10 years. And that's because there's really much less risk to those names this time of the year. Their Christmas comes in April.
Fascinating. Fascinating stuff. Thank you, Michael. Appreciate it. Michael Baker.
Happy to be here.
You bet. All right, from shopping to shipping all those products to your homes, Frank Holland joins me now. Frank, this is going to be Amazon's first holiday season without FedEx. What does it mean for Amazon? What does it mean for FedEx?
Well, Tyler, here's the question. Can Amazon deliver, but literally can it deliver? Exactly. Yeah. I mean, so this year, the company's self-delivery of e-commerce packages is expected to more than double, increase by 121%. As you mentioned, they don't have FedEx as a partner. And this is also the shortest window between Black Friday and New Year's Eve possible. The shortest window since 2013. And back then, the e-commerce market, that was about half of what it is now. So a lot of pressure.
And yet, UPS and FedEx are expected to see double-digit increases in package delivery. FedEx especially, they lose Amazon. How are they going to grow?
Well, UPS and FedEx actually single-digit.
Single-digit.
But the post office seeing a double-digit decline. And a lot of that, according to ShipMatrix, is due to Amazon just really asserting itself in the e-commerce delivery wars. And it is a war. FedEx's Fred Smith, he called it a war. He called it out when one of the earnings calls this year. He said it's a war. We're all competing for this market share. And as we see Amazon put more of those blue trucks with a smile on it on the roads, well, that's taking away from
the postal
office itself.
And because
still
the post office was their biggest deliverer, weren't they?
They still are. They still are, but they're definitely losing a lot of volume from Amazon just saying, hey, we're going to do more, not only on the ground, but also more in the air.
Let's talk a little bit about the logistics of getting these packages to people's doors. They've gotten really good at it.
They've gotten,
really good.
So we actually are going to be doing some stories later today about on-time delivery rates. Anything over 95%, pretty good. All these companies are right around the 98% range. Amazon, however, doesn't release the data, but it also depends on what door you're talking about, front door or car door. A lot of people are doing in-store pickup now. Cowen says about 15% of people will at least try in-store pickup this year. That's supposed to jump up to 25% next year.
How that impacts the shippers still has to be figured out, because the question is, are they picking up TVs, which they would go to the store anyway, or things that they would normally get sent to their house?
Yeah, that's interesting. I've never done the in-store pickup thing.
Me either.
Or the drop-off at a locker, which we have in my town. Frank Holland, thanks.
Thank you. Thanks,
Appreciate
Tyler.
it. All right, time for today's exchange trading fact. The ETF that tracks retail, the XRT, coming off its third straight month of gains. It is up 11% in that time. That's the first time it's put together a string of 3 positive months since August of last year. Well, coming up, Cyber Monday isn't just for retailers anymore. A look at who else is hoping to get a slice of the action. A slice of the action. That's a hint, by the way. Plus, Disney has had a good November and a good year. But with Disney Plus launched and Frozen 2 in the rearview mirror, can the company keep the momentum going into 2020? That is ahead.
Can you customize the S&P 500 to meet your client's income objective?
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Witch Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Ah, Christmas, a time for sharing gifts and laughter, and photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
What's the sign of a really first-class funeral directors? Is it how they're with you every step of the way? Is it the care they take looking after your loved one? The superb organisation they show on the day itself? The thoughtful little touches you maybe weren't expecting? Yes, it's all those things. But there's another sign you should also be looking for. The one that says dignity. You'll find it on every one of our branches and on the Dignity website. When you see it, you'll know you couldn't be in better hands. Dignity Funeral Directors, taking the greatest care.
Tonight, TuneIn has your Monday night NFL football with the Minnesota Vikings at the Seattle Seahawks. Kickoff at 8:15 p.m. Eastern.
Thrown down the middle, caught, touchdown over the shoulder, back of the end zone, Snead! Wow!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium.
50, round 40, round 30, round 20, round 10. Back shoulder fade for Harry in the end zone. Caught it! Touchdown!
Upgrade today.
Welcome back to the Exchange, everybody, and here are some of the movers this hour. It is a very rough day for some recent IPOs. Beyond Meat, Zoom Video, Slack, CrowdStrike, all down more than 3%. CrowdStrike leading the declines, off 8%, following a price target cut at Baird. Shares of Biogen falling after Baird downgraded the stock to underperform there. The analyst saying investors haven't factored in the risk that shares could fall as the company presents more data on its Alzheimer's drug later this week. We will talk to the analyst behind that call coming up next hour on Power Lunch. And there are some gainers on this down day, including Spirit Airlines, up nearly 2% on an upgrade to buy at Buckingham, not the Palace, the company. The bank citing new revenue streams, a new loyalty program, and possible future M&A. Now to Sue Herrera for a CNBC News update. Hi, Sue.
Hello, Ty. Hello, everyone. Here's what's happening at this hour. Security measures underway in London as world leaders arrive for the NATO summit. Queen Elizabeth will host President Trump and other leaders at Buckingham Palace tomorrow. Prince Andrew's accuser is expected to ask the British public to support her quest for justice during a BBC broadcast later today. Virginia Roberts Guthrie says that she was forced to have sex with Prince Andrew when she was 17 in connection with the Jeffrey Epstein trafficking scandal. Prince Andrew says he never had sex with her. Chicago's Mayor Lori Lightfoot says she has fired Police Superintendent Eddie Johnson due to, quote, ethical lapses in connection with his falling asleep behind the wheel. Johnson announced last month that he would retire at the end of the year. And an overtime win sparking a brawl on the field at the end of yesterday's UNLV Nevada game in Reno. UNLV Rebels winning the college football matchup in an upset. The fight, which is under investigation, started as players were celebrating in the end zone. You are up to date. That's the news update this hour. Emotions running high in college football over the weekend.
Absolutely. My team won, and they stormed the field.
They did.
It was
I
great.
was watching the game.
Good for you. Love that. Thanks, Sue.
You got it.
All right, here's what else is coming up on the exchange.
Jack Dorsey is heading to Africa, and investors are not happy. Another company gets in trouble in China. Going against the crowd, why one analyst says it's time to sell Roku. And it's not just retailers getting in on the Cyber Monday action. We'll tell you what other industries are looking to cash in. That's all ahead on The Exchange.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Get what you wanted this Black Friday. Sleek new laptop. Or one of those know-it-all smart speakers. So now is the time for Sky's superfast broadband. It's totally unlimited, powerful enough for all your gadgets. And it's just £27 a month for 18 months with £19.95 setup fee. Another great deal. Pause your new 4K games console and search sky.com. Sky Fibre areas, speeds vary by location, no traffic management policy. See sky.com. Prices may change during this period, terms apply.
Mate, this fan's suspension is rubbish.
Tell me about it.
Even the radio's had it.
I know, but I'd get nothing if I scrapped it.
Actually, you can get at least £2,000 off a new Ford for it.
You're kidding?
With Ford's new for old scrappage scheme, you can get between £2,000 and £6,250 off a new Ford van if you scrap an eligible vehicle with us responsibly. Also, there's 0% APR representative on Ford Acquire. Ford Commercial Vehicles. Backbone of Britain. Search Ford Scrappage. Exclusions apply. Contract and register by 31st of December 2019 at participating dealers. Agent ownership criteria apply to scrappage vehicle. Subject to status. Free post full credit. Deposit restrictions apply.
This week at Tesco, buy 2 items from our chilled party food range, like tempura prawns or mozzarella sticks, and get a third one free. So for every 2 people you invite, you can ask another for free. But who? Linda from Accounts or Julio from Magaluf 2010. Tesco, delivering Christmas for 100 years. Cheapest item free selected stores while stocks last. Ends 1st of January.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown. Again.
Search NFL today.
Ah, finally another commercial, said no one ever. Visit tunein.com/premium to upgrade now and get over 45 commercial-free music stations.
All right, welcome back to The Exchange, everybody. Let's catch up on a few stories you should have on your radar. It is time for Rapid Fire. Here with their take, Seema Modi, Bill Griffith, Kate Rogers. Welcome, all three of you. Hope you had a good weekend. Good? We did. Yes. First topic, Cyber Monday. It is not just for retail anymore. Businesses are selling everything from pizzas to cross-country flights at a discount today, trying to get in on the holiday spend. Seema, the travel industry is really looking to cash in with discounts, I'm told.
Yeah, that's exactly right. Cyber Monday, we tend to think of clothes and tech gadgets, but the travel sector, from the lodging companies to the cruise operators, are also offering their own deals. Royal Caribbean saying that you can bring a kid under 12 for free on select cruises. Hotels like Hilton also offering discounted rates in Europe, in the Middle East, and Africa as well. The context here is that occupancy has been on the decline. It's now at around 69%, which is down from the same period last year. Plus, the average daily room rate is also down. And keep in mind, all these hotel operators had a really tough third quarter. So this is one way they're trying to incentivize more customers to travel this holiday season.
I mean, merchants have trained us to want to buy stuff
today,
right now, starting at Black Friday and then on. So we have money burning a hole in our pocket. So why do we have to just buy 4K TVs and cell phones and all that stuff?
And Pelotons and whatever.
And plus, you guys who are millennials, you're into experiences anyway. So that would make sense. You'd want to look for something, a trip, rather than buying a gadget or something, right?
Look for a pizza, too, right?
But why pizza after we've just all eaten to ourselves to...
Exactly, which we talked about on Black Friday.
Maybe that's why.
Black Friday is not a huge restaurant day because it's a huge leftovers day. But by Cyber Monday, you're onto shopping for these deals online. So you're seeing restaurant companies like Domino's, Little Caesars, CiCi's Pizza, but also Grubhub was offering $5 off of McDonald's if you ordered from that restaurant on their platform. And I think, as Seema mentioned, context with her sector, I think the restaurant industry is becoming more and more tech savvy. Tech is becoming a bigger part of the story. So why not throw up a Cyber Monday deal? And if people are shopping online, they may be hungry as well, right?
Maybe they're ready to go. All right, let's move on to the next one. Topic 2, Jack Dorsey. Dorsey the Explorsy, CEO of Twitter and Square, announcing a plan to move to Africa for 3 to 6 months in 2020. Dorsey posting his plans after wrapping up a month-long trip where he visited Ethiopia, Ghana, Nigeria, and South Africa. He tweeted, quote, "Africa will define the future, especially the Bitcoin one."
Before we discuss the future in Africa and Bitcoin and all that, I would remind everybody what you just mentioned. Mr. Dorsey is the CEO of not one, but two publicly traded companies. And if I'm a shareholder in either one of those companies, I think I'd be a little dismayed that my CEO is going to be AWOL for 3 to 6 months next year. Now, I realize technology being what it is, you can still do your job technology-wise from anywhere in the world. However, he will be distracted beyond where, the other distractions that he's exhibited over the last several years as he's built these two companies.
That's right. Well, and also, too, the timing is just so interesting. You're heading into the 2020 election. He didn't know when he'd be leaving, but I mean, the whole disinformation thing on the internet between Facebook and Twitter, there's so much scrutiny on these big tech companies right now. If you're a big shareholder in Twitter, aren't you wondering why he's doing this right now? What could be more important than making sure this platform's up and running the way that it should be heading into this all-important election?
Exactly.
An odd time.
It raises a point. I mean, will there be a return on investment from this trip that Jack Dorsey takes to Africa? Obviously, big cashless payment opportunity. 1 in 3 adults in Africa do not have a bank account, Tyler. So digital payments really seen as a big opportunity, perhaps for Square as well.
Digital payments, Bitcoin, that's why one of the things he cited. Also, smart beehives, that's one of the things he wants to, I don't know what that is, but bees are very smart.
Bees are already smart
Bees
anyway.
are very smart. Blockchain voting, contractions
isn't it?
monitoring system, recycled bags into shoe polish, and other things, among the things he expects to explore.
Jack, what are you doing now?
He can grow his beard a little longer while he's over there, right? All right, topic 3, Roku getting hit hard today after a big downgrade by Morgan Stanley. The analysts there moving Roku to underweight from equal weight while raising the price target on the stock to 110 from 100. Morgan Stanley noting the valuation is too expensive. It's at 139 right now, expecting gross margins to fall and gross profit growth to moderate. Roku down 13% today, but up 354% this year. Thoughts?
I mean, I have a Roku, and I absolutely love it, but this talked about the exuberance surrounding the streaming wars and how much emphasis has been put on this company for the growth that it's exhibited, and can it really keep it up? So I think that they're not necessarily saying that this can't continue in the future, but at this rate, remains to be seen.
It has been a classic momentum stock early on in the streaming wars, but now they're getting competition. So, of course, we're very early in the whole streaming phenomenon in this country.
The stream has become a flood,
and
right?
will flood even more, So there's no question that their business will continue to grow, but at what rate? That's the whole question. And that's when the momentum players tend to get out of the stock and find another momentum stock out there.
Yeah, and when you read the analyst note, it seems like they're still bullish on the growth story behind Roku, but the fact that it's up almost 400% this year, they're saying just from a valuation perspective, it may not make sense at this point, but they're still bullish on the longer-term story. Plus, there are all other alternatives like Amazon's Fire Stick and Google's Chromecast that are also gaining traction.
Right. Topic 4, DC Comics dealing with an unexpected controversy, posting and then deleting a promotional poster showing Batman throwing a Molotov cocktail in front of the words, "The future is young." Chinese fans interpreted this image to be supporting the uprising in Hong Kong, where protesters have frequently thrown Molotov cocktails in their clashes with police. We reached out to DC Comics for a comment, and they have not yet responded. And yet they pulled this thing down.
Yeah.
It just speaks to the growing number of companies and organizations, from Christian Dior to the NBA, that continue to cave, in my opinion, to the Chinese. And if there is a concern, they'll pull off that ad or change their marketing
channel. Is the slogan, "The future is young," is it a direct reference to what any slogan that has been used in Hong Kong?
Well, it was interpreted as such by the Chinese.
It was interpreted as such.
Yes.
But,
and I would say this, yes, while you can be upset that some companies are caving in what is arguably one of the biggest markets in the world, that you can find opportunity. And speaking of opportunity, maybe that's where Jack Dorsey should be going. Somebody wasn't paying attention at DC because you shouldn't be getting involved. You know, if you're seeing the controversy that's growing elsewhere with other companies, NBA especially, why would you put that out there?
But I don't even, as I look at the thing, I don't even know.
Hong Kong doesn't come to mind.
Hong Kong does not come to mind. I mean, if I'm sitting in the art direction studio there, I wonder if it even occurred to them.
What is Batman doing throwing a Molotov cocktail anyway?
Yeah, well, that's a good question. I mean, I thought he was on the side for good.
Right.
But if you were not trying to send this subtle message, then taking it back almost creates a bigger controversy, because then people think, well, was that the intended message?
It confirms the
exactly. But
interpretation.
as you know, to Bill and Seema's points, what happened particularly with the NBA? I think you're going to see brands large and small really considering. Hopefully, they do it before something like this happens, because then they don't have to backtrack. But I have the same reaction.
Just stay out of the fray at this point. Don't do any. Certainly, you got to find ways to grow your market share in China and in Hong Kong. But there are better ways to do it than to have Batman throwing a Molotov cocktail. I still don't understand that.
Some would say then, being disruptive and being controversial, that's how you get those clicks and get more of the millennial base to pay attention to your brand. Case in point, Colin Kaepernick and Nike.
They're playing hardball over there. They don't mess around with all that, especially the Hong Kong protesters. Where they built these apps that showed which company was pro-China and which company was pro-Hong Kong protesters, and they go after those companies that are perceived to be pro-China. So you don't want to just step back and let this thing settle down before you get back into
Stay out of the news
marketing
as best
again.
you can. All right, folks, thank you very much. Kate, Bill, Seema.
Always a pleasure.
And Seema, I'm going to see you in about a half an hour, aren't you? You're going to be
That's right,
join
2
me on
p.m.
Power Lunch. Look forward to that.
We're going to have some fun.
We'll see you then. All right, Disney making magic in 2019 with box office hits like Frozen 2 and Toy Story 4. 2, 4, and what's 6 and 8 and 10, while also breaking the internet with the launch of Disney Plus. A look at what's on tap for Disney in 2020. That's next.
This winter, there's no place like Wicked, the award-winning West End musical. Discover the incredible untold story of the Witches of Oz and how one came to be called good and the other wicked. Wicked at London's Apollo Victoria Theatre. Extra shows added for Christmas.
I love Black Friday. Busy shops, crazy people, average deals. It's so much fun.
Said no one ever. So be savvy and do Black Friday the easy way with Smarty. Grab a huge 100 gig data SIM for just £17 a month on the Mega Plan. And with no credit checks, speed restrictions or contracts tying you down, you can kick back with the best Black Friday deal around. Now that's Smarty. Search Smarty Mobile to find out more, but hurry, as this deal won't be around for long. See smarty.co.uk for terms.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Witch Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Ah, Christmas. A time for sharing gifts and laughter. And photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10 gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
It has been a magical year for Disney. The stock was the best performer in November and has surged nearly 37% so far this year, thanks in part to the launch of Disney Plus and a record box office season. Can Disney keep it up in 2020? That's the question for Julia Borston. Hi, Julia.
Hi, Tyler. Well, the good news for Disney looking towards next year is that the launch of Disney Plus does not seem to be hurting Disney's power at the box office, with Frozen 2 setting a new record for Thanksgiving weekend. And looking forward, Star Wars: The Rise of Skywalker, which hits theaters in December 20th, should boost Disney's studio numbers into the first quarter of the new decade. And analysts are optimistic about early traction for Disney Plus, hooking more subscribers right out of the gate than Disney originally anticipated. But on the downside, next year, Disney doesn't have as strong a film slate full of familiar brands as it had this year. The studio has a Jungle Book movie starring The Rock and 2 Pixar movies, Onward and Soul. But neither of those Pixar films are sequels, and its only Marvel movie is Black Widow in May. With no other Avengers movies and no Star Wars movie on the schedule for 3 years. Plus, there's the ongoing risk of protests in Hong Kong. Disney warning in its last earnings call that if the protests continue, that operating income at Hong Kong Disneyland could decline by about $275 million in the next year. Guys, back over to you.
What is on their schedule for next year? The release. What are their big releases?
Well, Jungle Book could be huge. That is actually based on a Disney ride, at a Disneyland ride, the Jungle Cruise. Sorry, so the Jungle Cruise movie, which is based on the Jungle Cruise ride at Disneyland. And of course, The Rock is such a huge movie star. He usually brings a big fan base. And then you have 2 Pixar movies. And the thing about Pixar movies is they're always successes, but sometimes they're bigger than others. And sometimes a Pixar movie will spawn sequels like Toy Story did. So you just don't know what we're going to get from either of those 2 Pixar movies. And then, of course, we have all the Fox films that Disney is folding into its schedule. So we'll have to see how it does with those and which of those turn into the breakout hits. But I think this year have to look at the success of Avengers Endgame and see that they don't really have anything on that scale coming next year.
Yeah. All right, Julia, thanks very much. Good to see you. Everything has been awesome in 2019. Everything, investment-wise at least. Up next, a look at all of the vehicles that worked this year and whether the momentum will push into 2020. That and more when the exchange returns after this.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
On 3, our unlimited data is actually unlimited, like for reals. That means you can scroll and scroll and scroll through all the Black Friday deals.
Because we have no speed limits, no data caps, and you'll be 5G ready at no extra cost.
Wow, so many savings.
Our Black Friday deals are now on. Save up to £480. Switch to 3, in-store or online. See 3.co.uk/unlimited-data. Savings on selected phones on 24-month contracts. Ends 5th of December. Terms apply.
At TradePoint, we know that big jobs can mean a big shop around. We've a wide range of products from kitchens to plumbing to electrical or timber, so you can get it all in one place, 7 days a week, making big jobs smaller. So, for all you need, when you need it, get to TradePoint or go to tradepoint.co.uk.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
Hey, TuneIn listeners, Steve Kornacki here from NBC News. I want to tell you about a podcast I'm hosting called Article 2, Inside Impeachment. It's dedicated to bringing you the latest developments on the impeachment inquiry into President Trump. Every Monday, Wednesday, and Friday, I talk to NBC News reporters who are closest to the story to break down what's new, what matters, and what it means for the 2020 election. Search and favorite Article 2, Inside Impeachment on TuneIn.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Gold to treasuries, everything has been awesome in 2019, at least so far. And it's late in the ball game, Bob Pisani. He's got to look at the numbers. Hi, Bob.
We did take a look at the numbers, and it's very unusual when you have stocks, bonds, and commodities all up. And Tyler, it's even more unusual when they're up double digits. Everything is up double digits. You don't see this very often, folks. So look at stocks up 24%. There's the S&P. Crude's up the same amount, believe it or not. Gold's up 14%, although it's flattish for this quarter. And even treasuries, I'm looking at long-term treasuries, up about 14%. You don't see that very often, folks. And what's interesting is the breadth of the market in stocks is particularly strong this year. So far this year, all 11 sectors of the S&P are positive. That does not happen very often. Even energy, despite a lousy year overall, is positive, just fractionally. So far this year, 419 stocks in the S&P are up. That's 83% of the S&P. That's a very unusually high number. At the end of last year, only 174 were up. And of course, we had that disastrous December. The big difference, of course, this is not December 2018. The three things that have motivated the market this year are different this year than last year. The Fed is not tightening this year. They were last year. The trade war was heating up last year. Let's say it right now, an uneasy truce is the fair way to characterize it. And there's been some hopes that the global economy has been bottoming. We did see these China and European manufacturing numbers generally better than expected. And of course, as you know, the bottom line was U.S. manufacturing, a little disappointment. That's why we're down today. Guys, back to you.
All right, Bob, you're going to hang on for just a minute with us. So what does this year's outperformance mean for 2020? Let's bring in Brad McMillan, Chief Investment Officer of Commonwealth Financial Network. Brad, welcome. Good to have you with us. You know, I want to drill down a little bit here. You know, interest rates seem stable right now. Corporate profits as we turn to 2020 may actually, because of easier comps, look pretty good. But the question for you is, will what worked in 2019 continue to work and outperform in 2020 sector-wise?
I don't think so. I think we're going to see a different year next year. This year we had growth continue. We had a lot of worries that didn't actually come true. Next year we're actually going to be out from under those worries, so we're not going to get that kind of boost. So we're going to have to look for real value creation. I think we're going to have to go for different value drivers next year. I think we want to look at value. I think housing continues to have some legs. And I think we're going to be looking at the consumer again.
What were the worries that didn't pan out this year? I guess the principal one was that interest rates were going to continue to rise for all of 2019. That's how we ended last year.
Interest rates are certainly a big one. We have Jay Powell coming out and saying, basically, we're not going to raise interest rates for the foreseeable future. So that's one worry that's gone. And the market rallied on that. We have the trade war. Now, we still might get it, but right now it's been going on so long, it's hard to see, barring a complete disaster, how the market could factor that in and take a nosedive again. So that's pretty much out of the picture.
Bob,
even Hong Kong.
Go ahead. Finish your thought, Brad. Please, finish your thought. I'm sorry.
Even Hong Kong, when you look at Hong Kong, there's a lot going on there, but it hasn't really affected emerging markets. So a lot of these worries have just melted into the market.
Bob, do you remember a year where everything worked like this? I mean, it's like something ought not to work. I mean, just the probabilities would tell you that.
Yeah, 7, 8, or 9 years ago, there were 1 or 2 years where this happened, but no, not very often. And you can give the Federal Reserve some credit for it. They have specifically said reflation is what they're looking for, particularly in assets like stocks and bonds and commodities. And don't bet against the Fed is a cliche, but it's a true cliche. And I think that's the important thing here. I just want to take one exception on the growth versus value. Growth is very, very hard to come by globally. And people keep saying, why are we paying money up for Microsoft all the time and Amazon? Because the kind of growth that those stocks exhibit is very, very hard to find. So to get that, to get growth in earnings, which is what growth is, you have to pay a lot of money for it. So yes, they're expensive, but they can stay expensive for a long time as long as they're still the kind of growth prospects that you've seen.
Brad, you want to respond to that?
I think Bob's absolutely right. Growth is something that is scarce and you have to pay up for, but at the same time, price does matter. And when you look at all of the growth stocks out there, the valuations are extremely high. The stock market as a whole is very pricey, even by recent standards. And when you look at the relative performance, value is pretty much as low as it has ever been. It's a good deal. I'd rather buy cheap.
Yeah, but
I guess you would say it's 17.5 times forward earnings right now. I don't think that's too expensive. Lower rate environment, global economy perhaps bottoming. I think you could make an argument that we're not overpriced, fairly valued perhaps. But
and the alternatives, you know, I mean, I don't know. Where are you going to make money? You get a 10-year bond at whatever the price is, whatever the price and return is. That's not really a pretty return. Brad McMillan, thanks very much. We appreciate it. Bob Pisani, good to see you, sir.
Thank you, Tyler.
All right, the U.S. is once again a net oil exporter, something not seen since the 1940s. What got us there and which stocks could benefit the most, that is next.
This piece is talking to me.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Right, what have we got here?
55-year-old male with the worst case of drop jaw I've seen, Doctor.
Goodness, his jaw's quite literally dropped onto the floor, hasn't it?
He was trying on the latest hearing aid technology at Specsavers.
What? Specsavers have high-tech hearing aids? That is astonishing.
Apparently, these ones are rechargeable and connect to your smartphone and TV. Doctor. Doctor.
My jaw. Oh.
I need some help over here.
Oh.
Get the latest rechargeable Bluetooth hearing aid technology at Specsavers from £1,395 a pair. Ask in store for details.
Ah, Christmas. A time for sharing gifts and laughter. And photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today. Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
U.S. hit an energy milestone back in September, posting its first month as a net exporter of oil products for the first time in 70 years. The U.S. exported 89,000 barrels a day, more than it imported, and that is quite a feat considering that imports exceeded exports by 12 million barrels a day just a decade ago. Energy is the only positive sector on the S&P on the day, though not by much. But it is still the worst performing sector so far this year, though it is still positive. Joining me now, John Kilduff, founding partner at Again Capital and a CNBC contributor. We are a net exporter for the first time. Did you ever think a decade and a half ago that that would come true?
A decade ago, certainly not, Tyler. We were literally over the oil barrel for much of my life, going back to when I was when I was a young lad. Right, the shale revolution was a big part of getting us over the hump and becoming the number one oil producer in the world, and handling a good chunk of these exports that offsets imports that we still take in terms of crude oil, especially to get us there. But also too, our refiners did an amazing job in terms of we've always talked over the years about not building new ones, but they've expanded the heck out of the existing ones. And a lot of that extra capacity has served now to go elsewhere. There's arbitrage and trading opportunities down into Latin America, especially. Mexico has become a big customer of ours. And from time to time, our barrels of gasoline and diesel go over to Europe.
One thing I do hear every now and then is about the balance sheets of some of the companies that have been involved in the shale revolution. How healthy are they? Do they have too much debt?
They do. We're going to have to keep our fingers crossed that this miracle persists. Particularly a company like Chesapeake, for example, which was the pioneer, really, and just the first mover, issued a warning over its finances that it might not even be able to continue as, quote, a going concern, which means they're on the ropes, basically, financially. But here's what's going to be the situation. Even if a lot of these companies go under, Tyler, and they go bankrupt, the oil wells and the oil properties don't go away, obviously. The bigger companies, the bigger, stronger players will come in, buy those assets, and operate them. And likely, though, exhibit production discipline that we've never seen before. These newer independent oil companies, they just chase pump. That's right. The blue sky mentality, the typical Texas, 10-gallon hatters. They don't stop. Drillers drill, in real estate, builders build. Indeed. Good, bad, or whatever. Until they get fixed. You would have to say that the fact that we are now a net exporter and we are producing as much oil and natural gas inoculates us against price shocks imposed from the outside. That was one of the national security concerns for decades. Like never before, actually, too. Yeah. I've likened our situation, our place in the world now in terms of production as a firewall against some of these worries. Look what happened to us just this past year in terms of upset in the Middle East. The big attack on Saudi Arabia's Abqaiq crude oil processing facility. Back in the day, that would have been $100 to $150 crude oil price target or reaction. Nothing came of it. Very quick thought here. There are Democrats in the race who would like to shut down shale production. Huge mistake. There's problems with it. Certainly there's environmental issues, but it has made too big of a difference from our national security to our pricing, to our economy, to our jobs. It's here to stay. Particularly natural gas is the one that should not be getting thrown out at all. It should be embraced and not curtailed. John Kilduff, again, thanks a lot. Thank you, Tyler. Good to see you. That does it for The Exchange. And I will join my friend Seema Modi on Power Lunch, which begins right now. Hi, Seema.
Hi, Tyler. Thank you. That's right. We will see you in a moment. I'm Seema Modi. Here's what's new at 2 p.m. on Power Lunch. Stocks getting slammed as trade turmoil grips stocks and a weak manufacturing number reignites those recession concerns. Are we in for a December downer? Plus, a Cyber Monday shocker, retail sales exploding over the weekend. We'll tell you which stocks were the biggest winners. And later, Biogen sinking after one top analyst says Wall Street is getting this stock all wrong. He'll be here to explain. Power Lunch starts right now. And we take a look with 2 hours left in the trading day where stocks are trading at the moment. The Dow is currently down about 200 points, slightly off the lows of the session. The S&P down by more than 20 points. The big loser is the Nasdaq, down by more than 1%. Ty.
Thanks very much. President Trump heading to the NATO summit in London today, but before he left, he cast more doubt on a trade deal with China. Kayla Tausche has the details for us. Hi, Kayla.
Hi, Tyler. With punishing tariffs just 2 weeks away and no signing summit on tap for his trip to Europe, President Trump was non-committal today on whether that phase one deal would in fact be done this year.
The Chinese are always negotiating. Frankly, I could be other places that I could do all by myself and be even happier. I do understand what that means. But the Chinese want to make a deal. We'll see what happens.
President Trump tightened one screw on China by signing into law a bill backing Hong Kong protesters, and he's tightening another one on Brazil and Argentina, whose soybean exports to China are soaring as Beijing slows U.S. purchases. Trump faults those countries, quote, massive devaluation of their currencies, which is not good for our farmers, end quote, and says he'll restore steel and aluminum tariffs in response.
I gave them a big break on tariffs, but now I'm taking that break off because it's very unfair to our manufacturers and very unfair to our farmers. Our steel companies will be very happy, and our farmers will be very happy.
On top of all of that, there is still the USMCA, where officials and aides are hopeful for movement soon, but there are just 8 working days left here in the Capitol. Guys, back to you.
Kayla, thank you. Kayla Tausche in D.C. Trade concerns only part of the reason stocks are tumbling today. Our own Bob Pisani down at the New York Stock Exchange with more on this down day. Hi, Bob.
Hello, and what we've got here is a little bit of a hiccup in the narrative. So remember the 3 things that have gotten us to the new highs that have motivated stocks all year. The Federal Reserve is not tightening. They were at this time last year. Big difference. That hasn't changed. Number 2, the trade war. You saw the president talking. Let's just call it an uneasy truce right now. Not a lot of new news, but an uneasy truce. It hasn't changed yet recently, but this is what's changed today. The global economy. A lot of people have come to believe that the global economy is bottoming. Certainly no recession, and maybe the numbers are improving. Trade numbers, particularly things like manufacturing numbers. Here today, China had a manufacturing number better than expected. Europe's manufacturing numbers for the better than expected. The one except the United States, we missed. So it's not like a big thing. You can argue the consumer is the main driver, but it interrupts the narrative a little bit. That's the primary reason that we're weak today. And if you take a look, the sector laggards today, it's really been the big movers on the year. It's been mainly tech names and also communication services, which essentially are also technology names. Consumer discretionary, retail a little bit weak. You see that retail sector. So there's your 3 sectors that are weak. And take a look at what's down today, notably. Look at the 5 biggest stocks on the S&P 500. All of them down about 1 to 1.3%. Apple's been recovering in the middle of the day. But these 5 names, 16, 17% of the S&P, when they're down this much, the whole sector is going to be dragged down. Then you have a group of what I call the high beta names. They're not the top 10 names necessarily, but they're in the top 25. They're all notably weak today. Netflix, Visa, Nvidia, Broadcom, all the semiconductors are considered high beta names. So you get a few names that have done very, very well overall this year. They're the ones down the most. Guys, I think the bottom line is the consumer is still really strong. Tyler, back to you.
Bob, thank you very much. Bob Pisani in New York City. December off on a down note as trade remains the biggest mystery for investors right now. So are we in for a rocky ride into the end of the year? Let's bring in 2 CNBC contributors. Michael Farr is president and CEO of Farr Miller in Washington. Jared Bernstein is senior fellow with the Center on Budget and Policy Priorities, also former chief economist and economic policy advisor to Democratic presidential candidate Joe Biden. Welcome, gentlemen. Good to see both of you. Michael, let me start with you. In the last hour, we had a kind of interesting debate on whether stocks are too expensive or not. Do you view them as fully valued, overvalued? They're certainly not cheap.
They're certainly not cheap, Tyler, but I'm going to say fully valued. You know, earnings have sort of kept up. I mean, after 2018, we had a strong surge. Stocks trading at about 17 and a half times earnings isn't really awful. I mean, it's not really overvalued, fully valued for sure. And the thing that I like about this market here, and you know I'm always cautious, but the thing that I like is that so many investors still seem to be nervous. They still seem to be very cautious, and as long as nerves and caution are out there, you typically don't see markets top.
A little bit broadly about the economy, if we might, Jared. Michael points out that recession is never, ever really off the table completely, but he says it's not on the horizon either. How do you see it?
Yeah, I would definitely agree with that, and I would underscore the point that really none of us can see out more than, say, 3 months when it comes to accurately predicting a downturn. So all we can do is look at a set of indicators. I will say that I've long been more bullish than the average economist who was worrying about a recession 6 months ago when we had various hiccups. And the reason is one that you've been talking about a good deal today already, which is the strong American consumer. You know, we're 70% consumer spending in this economy. If you went over to Europe, you'd find that share would be 55%. In China, it's 45%. So it's not impossible to have a recession when you're looking at a strong consumer aided by low unemployment and rising real pay. But it's just harder. Now, you know, where a downturn could come from tends to be in recent cycles from the financial sector. And while there's always speculation going on, I don't see any obvious bubbles.
You know, Jared, a lot of the economic outlooks for next year are being tied to this trade story. We had Kellyanne Conway this morning saying a phase one deal will be reached before the end of the year. Let's say we don't get a phase one deal. Do you think there is a chance that President Trump will postpone the December 15th tariffs on China?
I think there's a pretty good chance of that, Seema. In fact, that's probably the scenario that I would place above 50%. I'm skeptic of the phase one deal. These guys just can't get out of each other's way when it comes to this stuff. That said, Donald Trump is starting to recognize that his trade war is bumping into his re-election bid. It really is having negative impacts on